Good afternoon. This is Sherry. I'm your host for today's Traders exclusive webinar. We're going to be talking about how to anticipate and trade moves in the market. And our guests today are Jody Samuels, Dr. Barry Burns, Dr. Julie Manz, and Marina, the Trader Chick Villatoro. Please check out our website, tradersexclusive.com. It is where we regularly post articles and video clips with valuable trading tips and techniques. It's also where you'll find a recording of today's webinar. We go to Trader Education. We go to trading webinars, and our past webinars will be posted here. It's our archived webinars. That first screen right there showed you the dates of our coming seminars, webinars. So before we get started, I'd like to share a quick disclaimer with you. And you should carefully consider, you guys know all of this, but we really need to do it to satisfy all of our regulations. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. And we'd like for you to take notes and write your questions down, but hold them till after each presenter is finished. Now, you can enter questions, but what I'll do is I'll hold them until our presenter is ready to take questions. So at this point, I'm going to introduce our first speaker, Jody Samuels of FX Traders Edge. She's going to be talking with us about how to apply the top 3 Elliott wave setups in your trading. Jody is one of North America's leading trading coaches. She's a sought-after speaker, and she's the author of the acclaimed book, The Trader's Pendulum, The 10 Habits of Highly Successful Traders. She mentors traders on developing proper trading skills and habits so they're better equipped to navigate the markets. And her trading expertise spans the financial, currency, and commodity markets. As a former trading professional for U.S. global investment bank J.P. Morgan, a sales professional for an energy company, and now CEO of FX Traders Edge, an Elliott wave-based training company for traders. So let me just bring Jody in. And Jody, the screen is yours. Let me just make sure you may have to unmute yourself. I think you're there.
Thank you, Sherry. Can you hear me and see my screen?
I can see your screen and I can hear you.
Great. Thank you for that lovely introduction. Thank you, Traders Exclusive, for inviting me here today to speak about a very passionate topic, how to apply the 3 top Elliott wave setups to achieve consistent profits in your trading. Wiley published my first book, The Trader's Pendulum, The 10 Habits of Highly Successful Traders. This is me speaking shortly thereafter at Harvard about the book. This topic is not in the book, but it is an excellent book, so I'm told by other traders like yourselves. But what you're going to learn about during this masterclass is how to anticipate market direction by reading the market map, how to locate and trade with confidence the 3 top Elliott wave setups using a simple checklist, and how to trade only the most highly lucrative setups for maximum profits using risk management. So I'm going to teach you all of that, but we're going to move pretty quickly. This is important for you to know. Why? Because the market is getting complex. It's a lot more volatile these days, as you know. And emotions are the Achilles heel for traders. So you need a system that removes the emotions. You need to filter out bad trades. And if you're planning to adopt automation, you need a foundation first. Finally, your capital is likely limited. So if you blow up your account, you might not get a second chance. So treat it seriously. Treat trading like a business. Is this for you? Well, if you're an experienced trader then this is clearly for you. It can help you take your trading to the next level. And if you are a new trader and watching my presentation, this is also for you. This can save you years of trial and error figuring out how to make trading work for you. A little confession. I've been trading for more than 30 years. You may think I have an advantage over most traders, and to a certain extent, you're right. In case you don't know me well, I traded currencies. That's how I started out for JP Morgan for 14 years in New York and Toronto. And I was a lead trader for the British pound for 6 years. Talk about volatility. I traded it from 240 to 105 back to 140 profitably. I've been trading for 20 plus years as an independent / retail trader, just like you, trading futures, Forex, stocks, and options. So if you're starting to think, oh, trading must be easy for Jody, but not for me, I also hit a wall after leaving the bank. On the one hand, I was confident. I had my bank experience. But on the other hand, I had doubts and uncertainty just like anybody else. I didn't have access to bank support and the flow of information, in quotes, once I left the bank. And then back then, if you can believe this, I had to pay $2,500 a month in data and chart fees. And I traded futures because there was no established Forex retail market yet. So what process did I follow to remove any hint of doubt, uncertainty, and to overcome starting the month $2,500 down to finally become an established and profitable retail trader? The same process I'm going to show you right now so you can remove uncertainty, get some clarity, and trade confidently for consistent profits. And I'm going to give you that briefing now. How to apply the 3 top Elliott wave setups to achieve consistent profits in your trading. This is my system. The first is looking at the market map for the analysis. The second is the strategy, and I'm going to teach you the 3 top setups. And the third is using trade management and money management for optimal risk reward. We're going to go through all of these things right now, starting with the analysis, the market map for the Wavy Tunnel Pro, which is the name of my system. The first step in achieving consistency is to have a thorough knowledge of the market to determine possible future scenarios and be prepared to take advantage of opportunities that arise. And in our system, we use the market map in order to provide market context and increase the likelihood of successful outcomes. Sometimes I call it a top-down approach. The market map is also the 8-wave market cycle. In other words, we need a GPS. We need the market map in order to determine the next move for whatever market we are trading. It gives us perspective and it gives us confidence in getting there if we're following our map. And this is the market map. On the left, you have the uptrend, and on the right, you have the downtrend. It is the 8-wave, Elliott wave market cycle where we have wave 1, 2, 3, 4, and 5 on the left for the uptrend. And notice how the trend waves are waves 1, 3, and 5. And then we correct the 5-wave sequence. And corrections take place in 3 waves. So after point T, we have a 3-wave correction. Same is true for a downtrend, where we have the market moving down and then it corrects. Now, this is the Wavy Tunnel to the right. See how elegantly it maps out the 8-wave market cycle. So I can label this chart just from looking at the Wavy Tunnel setup. And that's what if you join my program, you'll be able to do as well, so that these charts will speak to you. They'll just jump out at you and you will know intuitively what to do next, but you will have a system. So, and this is the downtrend. Same thing, market map on the left with the 8-wave cycle and beautifully, elegantly laid out by the Wavy Tunnel setup. So now let's go through the strategy, the 3 top setups for pulling the trigger using the market map that I just showed you. And this is the second step in my system to reaching the path to success. That's to have a highly effective strategy, which is easy to understand when making a trading decision. After a good analysis, strategy is used to identify the exact entry point, what your stop loss level is, where you're wrong, in other words, and your profit target or targets. What's also important is to know when to trade and when to stay out of the market. I can't tell you how many times it's just best to stay out of the market. That's a win. So many times students come to me after losing so much money in the market and they say, gee, I wish I had taken your program before. I would rather have spent the money on your program rather than losing it to the market. So just be wary of that removing the emotions is key. And that's what having a system is all about. It enables you to remove the emotions when you're trading. If it's boring, that's great. Then you don't have to fix anything. Let it be boring. If you want to try something out, try it on a demo or a practice account. So this is it. Let's go through the 3 top setups, and then we're going to look at some examples. So trade number 1, the first setup is to buy for the wave 3. And you leave your stop below 0.0, which is the start of the move, or below wave 2. That's trade number 1. And you can also buy within the wave 3 itself. So trade number 1 is to get involved in the wave 3. But we are going to focus more today on trades 2 and 3. Trade number 2 is to wait for the wave 3 to complete, and then we have a nice correction, and we usually correct in our system, we usually correct down to these moving averages, sometimes down to these moving averages, and it just depends. And then you would want to buy for the next move up, for the wave 5 up. Okay, so that's trade number 2, and we're going to look at some examples in stocks as well as Forex. The trade number 3, based on this market map, is to sell at the end of the trend. And that could be up here at point T, or it can be down here at point 0, right? Each one will be the end of the trend move, depending on if we're coming from a downtrend or we're correcting after an uptrend. So the trade is to sell the wave A, and you leave your stop above point T. You can also sell for the C wave after the corrective wave B. So notice I've labeled the 5-wave uptrend with numbers, and then the A, B, C is the correction. Corrections are labeled with letters, A, B, C. So we're going to study now and look at examples for the end of trend trade, and then we're going to move on to the wave 5 trade. So these are the 3 top setups, and we're going to focus on 2 of them. So what is the checklist that we look at for this trend reversal? It's right over here at point 0 and point T, trend reversal top setup. You are going to look for these 4 points: reversal candlestick pattern, divergence or major peak, trendline break, 1, 2, 3 reversal on smaller time frame. Let's get to it. But this is where we are in the market cycle. We're just going to take a simple example of the Aussie US dollar. This is for educational purposes. This is the daily chart, just so that we can understand the 4 lenses checklist. The first is the reversal candlestick pattern. Well, this is certainly a reversal candlestick pattern on the chart. You have a visible low on the chart, and we have a very long tail here. Whenever you see a long tail and then the market bounces off, initially the sellers are in control, then the buyers come in and take price all the way back up again. And this is also a candle of indecision because we close right in the middle. But then what happens is we have a nice engulfing candle following. So this is a reversal candlestick pattern. The second is the awesome divergence or a major peak. This is the awesome oscillator. This is what I use to look for divergence. And here we have a major peak. So we have two things checked off, the top two things on the checklist. The third is a trend line break. Just draw your trend line. And this is a very steep move down. Just draw your trend line. And when we break, that's the trend line break. And that is a trigger for taking a trade. And the next trigger that we're going to show you is a 1, 2, 3 reversal on a smaller time frame, which is right here. So I've moved down to the 4-hour chart, and we have two 1, 2, 3 reversal points set up right here. Okay, that is a trigger. So the first two sets you up for a potential reversal, and the trend line break confirms the reversal, and then the 1, 2, 3 pattern is how you can enter the trade. Let's look at another example. This is gold. And on this gold chart, it's a daily chart. We can see the reversal candlestick pattern here. This is an engulfing pattern. We have a major peak in the awesome oscillator. We have the trend line break, and we want to go down to a smaller time frame to see the 1, 2, 3 reversal pattern, which we do. And this is a beautiful 1, 2, 3 reversal pattern. And let me explain that quickly in case some of you don't know what it is, where point 1 is the top price, the price high, and then the market moves down. We label that a point 2. The market corrects. We label that a point 3. We draw a dotted blue line below the point 2 price action. And then once we break down, the 1, 2, 3 reversal is triggered. So this is where you would take the trade. Nice trade. Beautiful trade. Let's now go through trade number 2. That was trade number 3. Okay, now we're going to go through trade number 2, which is to buy the wave 5 with a stop below wave 4. This is the 4-hour Aussie chart. It's a different point in time when this occurs. So the first thing is we look for divergence or a major peak followed by a wave 4 correction. So we have our divergence, and divergence just means that price makes a new high and the awesome oscillator makes a lower high. It's the less than sign on the keyboard. That's your divergence sign, the less than sign in an uptrend. We have in orange waves 3, 4, and 5. We have divergence. Check. Then we look for a reversal candlestick pattern, which we have. Don't forget, we look for the correction for the wave 4 after we have this divergence. And this reversal candlestick pattern is a hammer. It's a long tail, and we have a nice 3-wave correction down. And then we draw our trend line, so we have the trend line break. And then we set up our 1, 2, 3 reversal. I set it up on this time frame. You could go down to the hourly chart. I just set it up on the 4-hour chart. It's your choice. Now let's see what happens. Well, we trigger the trade, and then the market moves up after that. We're going to talk about trade management shortly. This is just setting up the trade. Now let's look at some stock examples. This is Facebook, and this is the wave 5 top setup. So we have a nice move up. We have a major peak in the awesome oscillator. We have a reversal candlestick pattern. We draw our trend line, and then this is the 1, 2, 3 reversal dotted line. If you can just imagine in your mind's eye, point 1, point 2, point 3, when we take out this dotted line, that will trigger the trade long. Now, I'm also going to show you how to set targets on this one. I use the Fibonacci extension tool, and I run it from the wave 3 top, the peak where we have the awesome oscillator peak, to the correction low, which is here, and these are the extension ratios. So these are the prices that we can expect once price breaks through this dotted line. So this is the dotted line. These are the Fibonacci extension ratios. Because I study Elliott Wave, but Elliott Wave is based on Fibonacci. So our program is all about how to understand Elliott, Fibonacci, and even harmonics. So I'm using the Fibonacci tool in everything that I do. So I just want to share with you now how useful this is. So Facebook did move up, and it actually moved up to the 200% extension. Now you can set 1, 2, or 3 targets. You can set 2 targets. You can set 1 target and trail your stop. There are various ways of managing this trade, but this is the purpose of this is just to show you that you need to have a target so you know what to expect. So many traders get out too soon. They have a little bit of a profit and they get out. So what I recommend is to set 2 or 3 targets, so at least you're holding a little bit of your position for when for the rest of the move. Let's look at another example. This is Roku, and these were markets that I was following. So this is Roku, and we have the divergence in the awesome oscillator. Great. And then the market corrects. We have a reversal candlestick pattern. This is a piercing pattern. We have a trend line break. So we set up the 1, 2, 3 reversal, the dotted line, and then we wait. We set up our Fibonacci targets, and let's see what happens. So after we set up the Fibonacci extension targets, well, Roku shot up and it went to the 361.8% Fibonacci target. It is not even on this chart. The highest on this chart was 261.8%. That's why this is a good example of why it's really good to, maybe you can take some profits, but this was a huge move from $150 something to $239. Okay, so that's why set up a few positions and then you can take some profits and trail the rest. Here's another one, Beyond, BYND, same thing. We have awesome oscillator divergence and then the market corrects. And see how elegantly the Wavy Tunnel supports this correction right down to these moving averages. We have the hammer, which is a long tail. We have the trend line break, and then we set up our 1, 2, 3 reversal pattern. We also have another engulfing pattern right over here before the market breaks out. And this is the Fibonacci extension that we've determined prior to taking the trade. So these would be our targets that we're looking for. And Beyond actually went exactly to the 161.8% extension, exactly before we saw a correction. So these Fibonacci levels work. So let's just recap. What have we learned so far? So on the left, we have the point 0 or the point T trend reversal. And that's the trend reversal top setup. This is the 4 lenses checklist. On the right, this wave 5 trade is a trend continuation trade. The market corrects and then it continues in the direction of the trend. It's the wave 5 top setup based on the market map that we looked at the beginning of this presentation. That was our first step. Notice how all I've done was I reversed points 1 and 2. We look at divergence or major peak first for the trend continuation trade because we're looking at the previous swing move, divergence on a previous swing move. And over here, we look at it second. We can look at it first as well. It doesn't really matter, but I put reversal candlestick pattern first. On the right, the reversal candlestick pattern is actually down here, not up here. So that's the difference, but it's the same for lenses checklist. I just follow very specific criteria in my 4 lenses checklist to evaluate if I want to trade a specific setup. I remove subjectivity with a specific criteria. The greater the objectivity, the fewer the emotions. Remember, we said at the beginning that the market is very volatile and traders can be quite emotional, right? On a scale of 1 to 10, how emotional are you? Everybody has a different personality and would have a different number on the emotional scale. So the greater the objectivity, the fewer the emotions. I happen to be emotional, and I've had to work on this over the years, which is why I trade a system. And really that's why I wrote the book, which is which is my lifelong work, The 10 Habits of Highly Successful Traders. And I talk a lot about the emotions and being objective and having tools so that we are objective and trading the system as it is. It's been back tested. It's a system that works. And really, when it doesn't work, it's because I'm not working it. So finally, let's talk about trade management and optimal risk reward for achieving consistent profits. We looked at analysis, that's setting us up for the strategy. Analysis is finding good trades that we want to take, and then the strategy is actually triggering the trade. And now we're going to talk about trade management and risk management. This is the 3rd step in my system. The goal is to apply optimal risk and money management in order to maximize profits and lower risk. This step can tip the balance between being profitable or not. For example, by trading only setups with a minimum risk reward ratio that you set up in advance, such as 1.5 to 1, you can refine your analysis and improve your performance stats immensely. Then you need a smaller win-loss ratio. So example, if you are a day trader and you take 10 trades and the size of your loss is the same as the size of your profit, more or less, well, then you need a higher win-loss ratio. You need to win more than you're losing. So you need to win more than 50% of the time for you to make money. But if you can improve that and ratio and improve the size of your profits versus your stop loss, then you can improve your results dramatically. And that's what I was talking about by taking 2 or 3 positions and letting that 3rd position run, like for that Roku trade, instead of getting out too soon. It can really make a big difference in your overall profitability. If you let this grow, if you let your profits grow, well, then you don't need to win more than 50% of the time even. You can have a 50% win-loss ratio and still be profitable. So that's really key. So let's go back to the Aussie example and look at the 1, 2, 3 reversal. I have 2 blue arrows here, and this is where we would see a nice 1, 2, 3 reversal on this time frame or on the hourly chart, and we're going to buy at 58.45 and leave the stop below this 0.3 at 5,700. So that's 145 pips. So this is on a Forex platform. So that's 145 pips stop loss. Now, what we're going to do is we are going to run the Fibonacci tool on the previous swing move. This is another way to establish profitability. And we get very common Fibonacci retracement ratios: 38.2, 50%, 61.8, and 78.6. So what I've done is I've showed you 2 different examples where you set 3 profit targets at 38.2, 50%, and 61.8. And then we're going to set targets using the higher fib ratio. So for this one, these are our fib profit targets right here. Now let's look at the second example, where we start at the 50% and then we move to the 61.8 and then we go to the 78.6. In this example, you're taking your first profit at the 50%, the market goes up, it doesn't quite tag the 61.8, and then it retraces. So I understand that some traders might not be able to hold their position when we have a retracement, and that's why we take our profits. And it's a skill to learn how to hold your position and to wait patiently for the next trigger. So we would have to move our stop to break even at that point and then wait for the next two profit targets to be triggered. So this is a summary of what it looks like. Using the first 38.2, 50%, and 61.8 profitability targets, that's a 12-day hold. And using the second is a 16-day hold. So as a trader, you need to figure out what's best for you. This is not a day trading position. This is a swing trading or a position taker's trade plan. This is called a trade plan. So we take three positions, the entry, the stop, and we have the three profit targets. We can calculate our risk reward based on the average profit and the size of the stop loss. And if you take three standard lots, which is $10 a pip, this is what you would make, $7,590. And if you take three mini lots, which are $10,000 lots at $1 a pip, you would make $759. And see how the profitability increases down here when the risk reward increases. That's what I was explaining to you before. So here the risk reward increases and the profitability also increases. Another way to look at it is to forget about the dollar amount and profits for a moment, because everybody is going to have a different account size. Assume you risk 2% of your capital. That means that your stop loss is going to be 2% of your capital. For trade number one, the profit using a 1.76 risk reward and a 12-day hold, you're going to make 3.52% if you execute your trade plan. For trade number two, you're making 5.68% if you execute your trade plan, because that risk reward increases to 2.84, but it is a 16-day hold. So that explains a little bit about trade management and money management and how we can increase our profitability by setting our profit targets a little bit higher. And there are many ways of doing trade, of managing your trade. What have we done? We started by looking at a blank chart, looking for the candlestick patterns. Then we looked for divergence, the trendline break, and the 1, 2, 3 reversal pattern. I also showed you the Wavy Tunnel Pro, which is really, really a very simple way to map out all of these things and to map out the Elliott waves right on the chart. Then we set targets using the Fibonacci tool, which is also part of the Wavy Tunnel Pro, and there are other ways to do it using the Wavy Tunnel Pro. We looked at the end of the trend trade, and then we looked at the wave 5 trade. So now let me tell you about the program, and then we're going to take questions and answers. And yes, so there are 6 trades for the Wavy Tunnel. At the Breakout 1, the Breakout 2, the Breakout 3, and the Breakout 4, and the 2 end of trend trades, PW and Fill the Gap. So let's just have a little learning moment again, because we have some time. This is the market map again. And what I like to do is I like to trade the market cycle. So the first trade would be the breakout trade. That's when the new trend kicks off. And we already discussed one of the 3 top trades is the breakout 2 trade, which is really the wave 3 trade. So after we have a move up for the wave 1, we correct for the wave 2. Now let me explain something about the wave personalities at this point. Wave 3 is usually the strongest move in the sequence, in the market map, the strongest cycle. So really you want to get in on a wave 3. like you do. And there are various ways to get in on the wave 3. Our trade is called the Breakout 3, to get in on the wave 3. Let's say you miss the Breakout 2 trade, which is our getting in at the end of the wave 2, you can get in on the Breakout 3 for the wave 3. Then we have a wave 4 correction. Waves 2 and 4 are the corrective waves of the market map. We have a wave 4 correction, and we looked at several stock examples, and we also looked at an Aussie example to get in for the wave 5. And we showed our 4-step process, our checklist. We call this the Breakout 4 trade. So today I explained the Breakout 4 trade, the Breakout 2 trade. We looked at examples on the Breakout 4 trade, which is really looking for the wave 5. These trades follow the market cycles. Moving over to the end of trend trades, the PW is the trade that we looked at for the end of trend trade, and then we have the fill the gap. So I taught you 2 of my favorite trades to trade the market cycle. Well, and the third one is also trading the wave 3. I love to trade the wave 3, and I love the end of trend trades, and I also love the Breakout 4 for the wave 5 trade. When you're first starting out, it's good to pick one of these trades and to focus on it. So when you're starting out, focus on one of the trades that we discussed today and practice it, okay? David P. from England said, once you master the simple concepts of using the Wavy Tunnel Pro strategy, combined with the bungees and the semaphores, you can make more accurate, high probability trades each day, resulting in more profitable trades. This is the trading system that has worked for me over the past 30 years and counting, and it can work for you too. So join me in the Wavy Tunnel Pro 2020 5-day accelerated trading and mentorship program beginning November 15th, 5 days straight. The Wavy Tunnel Pro 2020, make no mistake, it's a solid master's in trading education for all asset classes, instruments, and time frames. There is no special software required. It works on all trading platforms. This is my flagship trading program and my personal system to achieve consistent profits in any market starting November 15th. And this is my team. Neil runs the trading rooms, and he is a Forex trader through and through. Jeff is our automated trading specialist, and he is a stock and options master trader. Neil is a Forex trader, but on his platform, because he's in London, he can get all stock instruments, all CFDs for stocks, CFDs for commodities, Forex, anything. So we show everything. And this is how we'll do it in a 1-week program. On day 1, we're going to teach you the Elliott Wave series. Day 2 and day 3 are all about the Wavy Tunnel Pro strategy. So you're going to learn all these trades. You're going to learn how to manage your trades. You're going to learn everything about the Wavy Tunnel Pro strategy. And then day 4 is all about live trading. That's what we're going to do the entire day. We're going to trade live. And day 5 is introducing the Harmonic Strategies so that it ties all together. So you're going to learn the exact trading system I've used to successfully trade in both institutional retail markets over the last 3 decades. There is more than 60 years of trading wisdom collected here. What's the price? For today, I'm giving $300 off. This special is $12.97. Usually I charge $15.97. I'm charging $12.97 for this entire program, or you can make 3 payments of $4.97 each. You're also going to get, I have partnered with Yisrael Roll, a Talmudic scholar, a psychotherapist and lawyer who shares a psychological CBT motivational approach to master the emotional self, because I feel so important. I've explained that the emotions are just so important to becoming a successful trader. And his program is called Ignite Your Soul and Your Bottom Line. the Empowerment Series to give traders the winning edge. It's a 6-week video and interactive webinar series. This is what you're going to get with his work. Ignite your soul and their bottom line, the Empowerment Series to give traders the winning edge. It's a 6-part video series, 1 video a week. Then you will have a weekly interactive webinar on Zoom with Yisrael Roll, and I'm going to be there too. And then you get a private one-on-one Zoom session for an hour with Yisrael Roll and a PDF copy of his book, Stay Woke and Ignite Your Soul. I think he's written 10 books, but he's such a passionate guy. I had a session with him yesterday. I've known him for a very long time, and I just felt so much better afterwards. So I'm throwing this in. So what to do next? Click the purchase button, choose your payment plan, get your login info, and gain instant access to the full Wavy Tunnel Pro course. And all you have to do is go to wavytunnelpro.com. In 5 days, you're going to have 30 short-ish training sessions, but it's going to take up the 5 days. It's all recorded. So if you miss a day, it's fine. You can go back. It's all recorded. It's lifetime access. And then we're going to do Q&As 3 times a day so that we make sure to answer all your questions along the way. And you will have the mastermind, which is access to 15 live Q&A and 11 student trade analysis sessions comprised of trade review and analysis, where I actually go through the student trades and analyze them. It's just invaluable. So you can internalize the concepts with numerous examples for practice to speed up your development. And that's not all. You're also going to get premium bonus, the Wavy Tunnel Pro and Wave Count Desk. So that's free for 1 month, where you get a trade scanner for Forex, stocks, commodities, and crypto, 4 London and New York trading and analysis rooms per week, daily wave count videos on 20 markets, trade with confidence videos and psychology podcasts, and trade alerts on Telegram with entries, stops, and profit targets. And you will join our Discord membership channel and get our automated trading tool. I'm not even going to go through all of these things, but just a few good trades to pay for this entire program. Yeah, it's huge. And we're going to hold your hands and mentor you to success in the trading room and Discord channel with our successful members who love to pay it forward. So this is the price, wavytunnelpro.com. And here's a recap.
And I do have some questions for you.
Go ahead.
So Eng wants to know, what are key levels and critical levels in Elliott Wave? That's something he needs to email you about.
He can email it to me about, because what I've explained today on the market map, those are the critical levels. Like I explained the whole process. So if you...
What's your email address you want him to talk to you at?
Yeah, so my email address is jody@fxtradersedge.com. JODY@fxtradersedge.com.
I'm just putting that in the chat there for everybody who needs it.
Okay.
Is there a quick answer for that, or is that something that's really involved?
Well, the key is the end of at point 0 and point T. Those are key levels, and then at the end of, well, the wave 4. One of the something that you learned in Elliott wave analysis is that when wave 4 overlaps the top of wave 1, it's usually not going to complete the 5-wave move. The 3-wave move is complete at that point. So when you see a 3-wave structure and you're anticipating a wave 4 followed by a wave 5, if we start to come down and price goes below the top of the wave 1, then it's likely a correction and you're going to have 3 waves in the opposite direction.
Awesome. And then also we have, is Wavy Tunnel applicable to all time frames and as well as day trading?
Wavy Tunnel is applicable to a 30-second chart, to every single time frame. So if you're a day trader, if you're a swing trader, if you're a position trader, from the monthly, the quarterly, on down to second charts, tick charts, anything, because the patterns are fractal. The markets repeat themselves, and all of these wavy tunnel patterns are fractal, and you will see them showing up time and time again in every single time frame. So it doesn't matter what kind of trading personality you have, it doesn't matter what you're trading, you're going to see all of these patterns in anything that you're trading on any time frame.
All right. Oh man, thank you so much, Jody. This is fantastic. Guys, you got to go to wavytunnelpro.com to get this deal. This is jam-packed.
Yeah, and I just want to, Sherry, I just
Okay.
want to say that the empowerment series with Yisrael Roll, I've never done that before, and I'm throwing it in. I'm partnering with him. He's just amazing. So you need to sign up for this over the next 48 hours in order to get that. And then the discount ends Sunday night, but you need to sign up over the next 48 hours to get the empowerment series.
All right.
And with, okay.
So everybody, you'll need to watch your email too, because I'm sure Jody's going to follow up with you. So thank you so much for joining us, Jody, and we'd love to have you back again. And then we like when people are bringing in really good information. We wait 60 days and we can have you back again.
Amazing. Thank you so much, Sherry. Thank you, everybody. Have a great rest of the time.
All
Okay,
right,
bye.
All right, guys. So the next person that we're going to have coming up is Dr. Barry Burns. And let's see, can you guys see my screen yet? Yes, I think you can. So let me just pop this back in. Dr. Burns is of Top Dog Trading. He's going to be presenting Trading Pure Price Action like the pros. And he started his study of the markets under the direction of his late father, Patrick F. Burns, who accumulated 70 years of trading experience in his lifetime. And just a few of Barry's accomplishments include author of Trend Trading for Dummies, publisher Wiley, seminar presenter for several exchanges, including the CME Group and Eurex, author of Top Dog Trading 5 Energy Methodology Plugin for Metastock, founded Top Dog Trading to help students shorten their learning curves and in becoming traders. And that's just the tip of the iceberg. So let me just bring you on here. Barry, let's see if we can hear you. Can you hear me?
Okay, yes, I can hear you. Hi, Sherry.
Thank you for joining us today. And I believe you're I've made you presenter so you can share your screen when you're ready.
Okay, great. Let me pull that up then. Let's see here. Alrighty. Doo-dee-doo. Oh, okay. There we go. All right, let me do that. Let me do this. I just discovered how to do presenter view in PowerPoint, and so that's what I'm arranging now, and it works. It's very cool. I like it.
Yeah.
All right. Well, I'm
have you shared your screen yet?
I'm looking to do that right now. I'm going to click here. Blambo. Okay. Did that work? Can you see it now?
Yes.
All right. Awesome. Well, thank you so much for having me. I appreciate this.
Thank you. Thank you for
fun.
coming.
My pleasure. All right. So welcome, everyone. Looks like we got a lot of people here today, so that's excellent. And I'm thrilled to be here with you. So let's jump right into it. So just, well, Sherry already shared about me, so I'm just going to skip through my bio. Saved me some time there. All this stuff and more. Oh, I got a podcast, by the way. If you people a podcast, then I got a great podcast for you. In fact, I guess people kind of like it because at least on iTunes, we've moved up, and this is old, so I'm not sure where we are right now, where our listing is, but gosh, we're ahead of Jim Cramer's Mad Money, some guy I've never heard of before, but I guess he's kind of popular. Tony Robbins, Wall Street Journal, Rich Dad, Poor Dad. So check it out. It's working pretty good. I know you've heard these disclaimers before, but since we have people coming in and out during this multi-speaker event, very important disclaimer, and I'm not going to read it all for you, but just understand that these disclaimers should not be dismissed as just legalese. And unfortunately, I know a lot of people do that, but this is really a huge benefit for you because the regulators are basically stripping away all the hype that can be done in marketing and saying, okay, here's the real deal. Here's what you need to know, and here's why so many people lose money. So I highly encourage you to read those legal disclaimers. They're your education. Now, as Sherry said, I'm going to talk about reading pure price action today. So we're going to start with the basics, and at first it might seem a little obvious, and I'm going to go through the simple part fast, but just to bring everybody up to speed, and some nuances that maybe you aren't aware of, and then we'll get into some more advanced stuff. So we're going to do beginner, intermediate, and advanced all in the next 40 minutes. So it's going to be a whirlwind. All righty. So for those of you who are familiar with candlestick bars, there's a couple of distinctions that are very important. So number one is a significant candlestick. By the way, I'm not going to go through all the traditional Japanese candlestick parameters and the poetic names and all of that. I'm going to talk about pure market logic. Market logic. So for example, what do these things mean? What's going on behind the scenes when you see this on your chart? Well, when we get a wide range bar, so there's really two parameters, how wide range the bar is from the high to the low, and it needs to be a wide range bar for it to be meaningful. Anything that's narrow range from high to low is basically the market just kind of stalling out, chopping, going sideways for a little neutral bar. It's a neutral bar. Okay, so with this, we got wide range from high to low, and we also have wide range in the real body, the green part of the bar. It opened here, it closed there, and so it's green. And so those two things put together is what makes that a bullish bar. Conversely, the other way, wide range from high to low, wide range from the open to the close. And so it's red, meaning that it closed down here at the real body. The colored part is called the real body, and therefore it is a bearish bar. That's just one bar logic. Now, the other type of one bar price logic that I want to share with you is this. So again, needs to be a wide range bar from low to high, but now we've got a narrow range in the real body. And what this represents is, what this really means is that we have a long wick at the top, and therefore it's a bearish bar. Even though the real body is green, I don't give a mouse's left patootie about red-green in this situation. Markets have an element of noise to them, and I find that with, especially with Japanese candlestick bars, people get really enamored with whether it's green or red. That doesn't always matter. In the previous case, it did. In this case, it doesn't. If the open and the close are real close together, it's just doesn't really mean much as far as it's red or it's green. What does mean something is the long wick on the top. In market profile, they call this a rejection of value. And that means during this period of time, whatever time frame this is, whether it's, let's say it's a daily bar. So at the end of the day, when all was said and done, all the tweets have been tweeted, all the gossip and rumors have been gossiped and rumored, then the market has decided that, you know what? We're not going to pay this much, these prices up here. We value the market down in this range. And so it's a rejection of all these higher prices, and therefore that is a bearish bar. Conversely, this is a bullish bar. Again, red, but I don't care. All these prices below here have been rejected that day or that minute. Okay, it could be a very short-term signal. And during that period of time, the market, meaning the market participants, the people bidding, buying, selling, offering, they've decided, yeah, okay, this is a good deal, and yeah, we're going to start coming in and buying here. This is getting cheap. That's a deal. That's a steal. All right, now 2-bar logic, we take it to the next level, because 1 bar and a $20 bill will get you a homeopathic amount of caffeine at Starbucks. 1 bar doesn't mean a whole heck of a lot. So it's an indication, but I would never trade that 1 bar pattern alone, either one of them. So now we go to 2-bar patterns. So we got a bearish bar followed by a bullish bar. And that shows you just 1 bar doesn't mean a whole heck of a lot. Got to put together a bunch of pieces of evidence. So now we've got a bullish 2-bar pattern, and here we have a bearish 2-bar pattern. Bullish bar, bearish bar, and this one completely basically covers. Again, now you'll hear about engulfing bars and things like that. I'm not worried that this is a pixel below the high of that bar. That's meaningless. It's not enough movement to have enough meaning. That has meaning, okay? The big move. Again, what is this two-bar price logic? This is a bearish two-bar price pattern because, again, yep, a little bit of a bullish bar, but followed by a very bearish bar rejecting the value, looking for a shift or a swing high. Conversely, here looking for a swing low, rejection of value below the bar. Now that we've covered that, what is this? So this is a neutral pattern. And because this bar is neutral and the previous bar was bullish, we're still in bullish mode. When you get a neutral bar, whether it's a, this is basically like a spinning top, but to me, it's, again, just very neutral because it's very narrow range. So the market's testing highs and lows and not really going anywhere. They've pretty much got a, even match between buyers and sellers. And so when you get a neutral bar like this, we just maintain our sentiment of the bar before it, which in this case is bullish. So let's do a little quiz here now. You didn't know you could be quizzed, did you? So this is where we look at, now we put all the bars together and we look at, okay, bar by bar. By the way, I always read the market bar by bar because the market could do anything at any time. So price pattern is one really good, important piece of information as we evaluate what will happen in the future. So look right here. And does this bar validate or invalidate the price action of the bars that precede them? So this bar right here, does this indicate a swing low? What do you think? Go ahead and type that in if you want to, and do your little quizzes for yourself. And let's see what you all think. Oh, there we go. Just pulled up the questions box so I can see your questions and your answers. So yeah, go ahead and type in there. Let's have a little engagement. What do you think? Does this bar right there, is this a bullish bar? Does this help us to identify that that's a swing low? And the answer is no. And this is where you got to be very, very careful. This is called forward-looking bias. We're looking at a historical chart here. And the natural inclination for people to say is, yeah, okay, oh, there's a swing low, the market went up. I should have been able to know somehow, there should have been some sort of indication that the market's going to go up from there. And brothers and sisters, that's just not always the case. There's not always a high probability signal that the market's going to go up or conversely down. And I did this on purpose to share that with you, because people seem to think for some reason, and I used to think this myself, I would reverse engineer everything. I'd look at historical charts, I'd look at my trades, and I say, oh, how could I have known that that would go up? And sometimes the answer to that question is you couldn't have. There was no high probability trade. The market's going to go up, going to go down, going to do all kinds of stuff, but there's not always a reason that would give you a high probability trade at that time. And you didn't miss a trade. It's just there was no high probability signal for entry. All right, now here there was. Now we've got a two-bar pattern, more of our engulfing pattern. Again, because this is narrow range bar. That's why it's neutral. That's why there was no good signal there, despite the fact that it went up. Oh well, so what? Market can do anything at any time. Now here, this bar engulfs that bar, so that's a better signal. Goes down. Again, neutral bars, basically. So we just maintain our bias of going down. Now here we get this bar engulfing the bar before it. So yeah, that one is a bullish bar. What about, whoops, my little slide thingamajiggy didn't work there. Now let's put some together on the hard right edge of the screen. All right, I showed you a historical chart, and I did that again to point out the forward-looking bias that we are all subject to. So now we'll look at the hard right edge of the screen. Right here, do we have a signal, do we have any kind of high probability price pattern that this market would go up, down, or sideways? And the answer is yes. So the answer is this. This market went up, it closed the gap, but it wasn't just the gap. Sometimes gaps close. Sometimes you get what's called a gap and go. A gap and go is where it would just keep going down and the gap would not close. Might close, maybe tomorrow or 3 days from now or 3 months from now. But, I'm trading right here. I don't want to wait 3 months for a gap to close. So the indication that this gap would close was this. We gapped down. We went down here, came back up, retested this low. And as we retested this low, we got one of those bar patterns where we got a rejection of value with a long wick, where the market participants said, ooh, that's really cheap. And so it didn't break that support, this provided support, rejection of support. And therefore, that price action is what tells you that the high probability is for the market to go up and the gap to close. What about this one? What about this one? Market comes up, puts on a high, retests the high. Now again, don't get too enamored with every pixel on your chart. Markets are not that exacting or precise. This is a this is a 5-minute chart, okay? Well, some people are going to be trading a 2-minute chart or a 60-minute chart or a tick chart. And so, the scale or the fractal is going to look very different on different time frames. And therefore, you might say, oh, I want it to go up to here. Well, it rejected those prices. And so it comes back up and it is testing this high and we engulf the previous bar. And therefore, sure enough, the market goes down. And that's a double top, even though the market didn't go all the way to this high. Close enough. The markets have a little bit of noise to them, and you have to allow for that. How about this one? So now we're coming up, take a little retrace, boom. Obviously, big red bar. And now this one, we're adding one more piece of evidence called resistance. And I'm sure you've all heard of support resistance. So now with support resistance, this also must be taken into consideration when you're reading price action. So sure, we got a big green bar as I showed you on the last chart, right? I showed it to you on the hard red edge of the screen. But look, we've got resistance here and here, these two highs. And we sliced through it and we closed above that resistance. So now when I go back to this example where we show the future, see, this is where these resistance levels were. We sliced through it, we closed above it. For example, here's a red bar that's just as wide range down, but it closed at support. Did not slice through support. So this is why we don't just read price bars alone. We have to combine it with support resistance levels. All right, now let's talk about volume logic, because price, again, cannot be traded alone. It needs to be traded with support resistance. It also needs to be traded with volume. In fact, I use 5 energies and I call this the energy of money flow, the energy of money going through the market. So what about volume logic? So as we look at volume combined with price, we want to look at the distinction between large volume and small volume. So that kind of makes sense. That's intuitive. We want enough volume to make the market really move, to give it some emphasis, some oomph, but we don't want too much volume, believe it or not. Too much volume can create an exhaustion pattern. And the logic behind that is, well, think about it. What is volume? Volume is orders coming in, shares, contracts, lots coming in. All right, well, there's only so many people, interested in any given trade at any given time. And if everybody comes in who's interested in that market at that time, there's no one else to come in. And therefore, the market will not follow through. That's why you don't want too much volume. In my trading, I try to get in before the majority, because I want the majority of people coming in after me, because that's what continues to push the market in my direction. If I come in after everybody's already in, no one else to follow, market's not going to keep going. I'm done. Late to the party, right? And everybody's already left and I'm just there to clean up the mess. So I don't want that. The next thing is, it's not just large volume, we want smart volume. In other words, we want professional participation. So this is where we compare professional volume with retail volume. Now, this is one of the categories that I teach in my training, which is called the dollars are in the details. The dollars are in the details. So again, taking it one step further, now we're getting to more advanced stuff. Okay, we started out with basics, intermediate, now we're going to get to more advanced. So not all volume is created equal. So you could look at the histogram at the bottom of your chart, for example, that measures volume, and you could trade that. And that is not enough information because you don't know who that is. Most people lose money trading, right? We all know that. Most people lose money trading. Most people. So when you see a lot of volume coming in, that could just be a lot of amateurs coming in and trading. And since most amateurs lose money, you do not want to trade that volume that is showing. It says, ooh, a lot of volume is coming in. Yeah, but whose volume? So let's drill down in that. For that, you cannot use the volume histogram on your chart. It doesn't show you this detail. So for this, I bring up a time and sales window. So the time and sales window breaks this down. It's like an X-ray into that volume histogram at the bottom of your charts. So here's what I do. Walk you through the details. This is more advanced stuff. So my time and sales window, I like to filter it and edit it. So if you just go to the default route, you'll have these columns. Different charting platforms, by the way, allow for different editing and configurations. So you'll just have to, whoever you're charting, this one's TradeStation, theirs is real good. NinjaTrader's really good. So you'll have to talk to your charting platform and see what functions they offer. But in TradeStation, so we've got these columns. Time. So this is the exact time when each trade is executed. And this is what we're talking about. It's deeper than just the volume histogram. That just measures how much volume occurs under each bar or in each bar. This one shows you each trade. And so you'll notice 12:59:57 p.m. All right, and this measures every single trade that comes through the market. Now, if you just use the default, it'll probably show you the bids and the asks as well. So I edit my time and sales window, and I uncheck the bid, I uncheck the ask, and I don't want to see those because those, if you're really good tape reader, which is a skill that has to be developed, you might find meaning in those. But I'll tell you, I sat next to a trader who was one of my former teachers, and I sat them and traded with him, and I saw him gaming the market. And that means he would put in bids, he would put in asks, and then before they would get filled, he'd pull them. He'd cancel them. And he was trying to literally deceive people reading the time and sales, or the level 2 at that point. Level 2 is, anachronistic now. You need level 3 if you're going to be a tape reader. But I just use time and sales. So I don't want to see the bids and the asks. I want to see what? I want to see people who have committed their money to the market. In other words, when people have their money leave their trading account, go into the wild marketplace, now I know they're committed. If it's a bid or an ask, they're not committed. If it's an actually executed trade, oh, now they're serious. Now they're serious. That's what I want to see. I trust that because people are very serious about their money, and now they've let their money go. So that's why I edit this to only see trades. Okay, so you see the time, you see the type of, these are actually executed trades, the price, and the size. Now, this is the other one that I edit. So remember, what we want to see is the distinction between the amateur traders and the professional traders. And we want to not follow the amateur traders, we want to follow the professional traders. So one of the ways to do that is to say, well, let's see, how can I distinguish between them? Amateur traders in general have smaller trading accounts. Professionals in general have bigger trading accounts. So I don't want to see all the orders go through. By default, you'll see every order that goes through. But I edit this for size. So let's see, this is the NQs. And so these are contracts, how many contracts that they're trading. And so I edited it so that I don't want to see anything less than 20 contracts. Now, remember, that means one person is trading 20 contracts on one trade. Most retail traders cannot afford to do that. They don't have big enough trading accounts. And that's why I do it, because I don't want to see the amateur trades. I want to see the smart money trades, and I want to follow them. Now, looking at this, and kind of cool too, because you got your red-green delineation here. And really looking at this one right now, I wouldn't do anything, because we've got buyers, we've got sellers. It's kind of an even thing. Markets move on supply, demand imbalances. There's no supply, demand imbalance here. It's balanced. I don't like it balanced. So I'm not going to trade that. Here's another tool, by the way. Some trading platforms have this, some don't. TradeStation does, I believe. I think NinjaTrader has this as well. And these are called block trades. In fact, that's what these are. These are block trades. And again, a block trade, you can set it to whatever you want, but it basically means a large trade, one trade that has big volume on it. And you can adjust that, there's no specific number that qualifies it as a block trade, and it would vary by market. But some have an indicator where you can actually plot this on the bottom of your chart. Now, that's what I did. So this is why you're not seeing volume under every bar. This is only plotting the block trades as defined by me as 20 contracts or more per trade. So what do we see here? All right, we've got a nice uptrend. So, guess what? A lot of people say, oh, wait for the market to go up a bit. And when you see a trend, take the middle out of the trend. What happened in the middle of this trend? Where's all the professionals? I don't know. They're over at Starbucks getting their mocha lattes, I guess. But that's not what we do. As I said earlier, professional traders always want to get in earlier than amateurs. Then we let the amateurs come in and continue to push the market in our direction, so we get the big follow through, the big rewards. Professionals came in down here. And then you might say, oh, look, maybe I should get in over here. Probably what's happening is this is where the professionals are getting out. And so everybody in their parakeet, they're looking for a confirmed trend. One of the ironies in trading, unlike a lot of things in life, is by the time everything is confirmed, clear, obvious, you're too late. This is one of the things that makes trading difficult, is that our intuition says, wait for as much confirmation as possible, and then you have a high probability trade. And that is the opposite of what is true in trading. In trading, and here's why, it has to do with mass psychology. Again, by the time it's obvious, then all the amateurs are coming in. That's amateur hour. And most people lose money again. So it's kind of like the phrase you probably heard, buy the rumor, sell the news. In technical analysis, the news of technical analysis is when everything's obvious. The rumor is when before it's obvious. So you follow these people here and you're like, oh, okay, they're turning this puppy around. And then by the time you get your higher high, higher low, higher high, now they're getting out. All right, let's take another look at this. Now, this is an even more advanced strategy that I invented myself. I don't know, maybe someone else has done this, but no one else ever taught me. So I just came up with this on my own. If others came up with it independently, then God bless them and the horse they rode in on. So what I do is I bring up 2 time and sales windows. And one I filter, I edit to show me trades that are 2 contracts or less. And why do I do that? I do that because this one shows me what the retail traders are doing, the 80% who lose money. So now I do want to follow the retailers. I just don't want to do what they're doing. I follow them so I can do the opposite. And then I bring up another time and sales window. And that one, I filter it. So, well, this one has 10 contracts or more. Okay, you could do 10, 20, whatever you want, depending on the market, how much volume it has, etc. So 2 or less, 10 or more, and I compare them. Now, look, the prices are the same, 1205.75, 1205.75. So we're talking about at the same time, but who's going long, who's going short? Go ahead and type that in. Participate here a little bit. Is the smart money buying, or are the, which way would you want to go? Would you, this market right now at this time, would you rather be long or would you rather be short? There's people on both sides of the market here, same prices, but the professionals are going long. And so follow the money, but follow the smart money. And a lot of, I'm going to just kind of interject this too. Sometimes people say, oh, professional traders, the institutions, they have advantages over us. That's not fair. And they complain and they moan and blah, blah, blah. Well, that's not a very empowering position to take. It's not a very empowering attitude. So it's true that institutions have some advantages over us. That's true. So now you've got a choice. How are you going to mentally address that? So you could say, well, that's not fair and get all, huffy puffy about it. Or you could say, well, wait a minute. All right, if they have advantages, how can I tap into those advantages? And this is one of the ways to do it. Say, great, let them pay for all the algos, let them pay for all the expert programmers, let them pay for all the high-speed microwave technology, let them pay for the servers on the exchanges, and I don't have to pay for all of that stuff. I don't have to hire the geniuses and the quants and all that kind of stuff. All I have to do is, if I can't beat them, join them. Just follow them. Follow the money, honey. Thank you, Pips King. yeah, this is amazing. It really is. Turn my trading around. And I even take it to one more level. All right, Ninja Trader has this. And so there's a couple, you can even go deeper if you want to. You don't necessarily need to, but it's an extra level of that X-ray technology. So now with Ninja Trader, what you can do is you can highlight not only the buys, but you can highlight it with a different color when they buy above the ask. And you can change the color to when they sell below the bid. So why would you want to do that? That shows aggressiveness. If they're willing to buy above the bid or sell below the, or sell, buy above the ask or sell below the bid, that shows they're really aggressive, right? So that is another level of sophistication. And then the next one is, here's my block or the, where I've filtered it to see, let's see, 20 contracts or more. And then, you know what? Professional traders aren't always right either. Just because the smart money's taking a trade doesn't mean that they will be successful on that trade, right? They are successful over a large sample of data, absolutely, 100%. But they have losing trades as well. So it's not a guarantee that that trade is going to succeed. So I like to even add one more distinction. So you got your retail traders, you got your amateur traders, you got your middle level traders, and then I want to see the really, 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 really big traders. And so now I've added a fourth column, and this fourth column is set to 50 or more contracts. And then NinjaTrader allows you to add the word block in there in the fourth column. Okay, so now here we see some green, we see some red, green, red, green, red, green, red. But if you look at the ones that are 50 or more, those are all red. And so now I see that, okay, so our mid-level traders, kind of mix, more red than green, but all the really big traders, 100% red, 100% red. And by the way, what is one of the most challenging and frustrating things for breakout trading? It's false breakouts. And we get a lot of them. And we get more now than we ever did. My dad was a stock trader. I've been brought up trading stocks. He started my formal education when I was 8. I'm in my 60s. So many, many, many years of trading. And there was a time when breakout trading worked really good, and it can still work out really good if you know how to trade it. And this is how. I'm going to show you right now. So you add your little block trade indicator down here. Notice the market's choppy. We've got to stay out of choppy markets. Chop, 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 chop up your count, chop up your emotions too, because trading is a very emotional thing. It can be. So while it's in this channel, look, where's all the professionals? They're nowhere to be seen. Nowhere to be seen. And therefore your trade should be what? Nowhere to be seen. So this is one way to stay out of choppy markets. Now, on the breakout of this channel, right here, what do we see? Whoa, big, big block trade. Big block trades come in. And so if you don't see this, I would not trade that breakout, because that could just be retailers trading a breakout, and then it's gonna come back and fall inside the channel. But if professionals are trading it, then the odds are very high that this breakout will continue to follow through, and it does. So that is a wonderful solution. First of all, well, remember, two things here we've learned with this pattern: how to stay out of choppy markets, and when to find breakouts that actually will follow through and go to the moon, Alice. Okay, so unfortunately, I kind of a little bit dropped the ball today. So gotta apologize for that. When I say I dropped the ball, I didn't bring anything to sell you. I got nothing for sale. And I know that now you're all really mad at me, and you're all saying, oh, Barry, you're supposed to be selling us stuff right now. That's what this is all about. We want you to sell us some stuff. Take my money, please. I will not take your money today. I got nothing for sale. So I do apologize for that, and I know I've upset you. But what I will do to make up for it is give you something for free. And it's really, really, really good. So, by the way, first of all, if you want to contact me, just feel free to email me anytime, Barry@topdogtrading.com. Happy to talk with you. And what I'm going to do, instead of selling you a course, I'm just going to give you a little mini course I put together. And it's 5 videos. You get one a day, absolutely free. And it includes my rubber band trade strategy, because I'm not much of a sales guy. I'm a trader and I'm a teacher. And so, you know, if you want my courses later on, fine. But what I want to do is just give you a trade strategy so you can make some money before you buy my courses. And hey, you might be able to just make enough money to buy my courses with the trade strategy I give you for free. So it's called the rubber band trade. It's a mathematical model based on reversion to the mean. That's the math behind it. So it's one of my favorite trade setups. I still trade this all the time. I'm not giving it to you because it's an old worn out trade. I'm giving it to you because it's one of the best trades, one of the highest win-loss ratio trades I've ever seen. And I know people mentally needs a high win-loss ratio. So I give you the trade setup, I give you the rules, I give you the filters. I pretty much look for this. Well, I do look for it every single day. 5 videos, interactive quizzes to make sure that you're getting everything right, so you have the feedback. Also, I'm going to give you my cycle indicator. Now this, just to be very transparent, my cycle indicator is a modification of an indicator that's already on your chart. So there's no indicator to download or anything like that, but I modify a common indicator that's on every charting platform out there. So again, not selling you an indicator, but that takes a little more time than I had today. So I'll share that with you on a free webinar. Just go to www.rubberbandtrade.com. And if you could type that in for me, Sherry, I would appreciate it.
I put that in the chat already, and I also put your email address in there.
Oh, you're so
some great people. You got a lot of big fans on today. This is genius, Barry. And Mark says, Barry, I'll be calling you to discuss matters, eyesight and trading. And Mark also said middle chart stochastics.
Okay, well, Mark, email me and we'll discuss that on email. Yeah.
And you're so funny. Thanks for your great info. And you're the greatest, Doc. And great job, Barry. Does anybody have any questions for Barry? He's got like 6 minutes left. This is unusual.
No, I try to be very punctual and respectful, especially when we have, many speakers, and just like to respect everyone's schedule as well.
Well, I appreciate that. So you've got the free rubber band trade strategy. I'm just watching to see. Okay, so Nat wants to know, what's the indicator used at the bottom?
Oh, it can go by different names depending on the charting platform. Let's see, I'm trying to think. NinjaTrader, I think, calls it, well, it's usually called like the block trade indicator, but it can go by different names. Let me see if I can't pull it up right now. I don't have access to my browser. But I guess the best thing to do would be to contact your charting platform support team and just say, hey, do you have an indicator that can identify block trades for me? And then, they all have their different terms, and then they can tell you if they have it or not and what it's called if they do have it. And by the way, an extra little tip, if they don't have it, then go to the chat room or discussion board for your charting platform. And sometimes people will create indicators and post them in discussion boards and just give them away for free. And so they might be there even if it's not native to your charting platform.
Okay, cool. John wants to know, does TOS have block trades?
Thinkorswim. Good question. I am not sure. I know that TradeStation and NinjaTrader do. I do have Thinkorswim, so I should know the answer, but I don't know the answer to that. You'll have to check.
All right. And then the person that wants the 5 videos needs to go to rubberbandtrade.com to sign up for that free trade strategy that's on the screen, right?
Correct. And also, by the way, yeah, for the webinar, you get access to the webinar at the same place. Just go to rubberbandtrade.com, and then you'll also be invited to it's a recorded webinar where I give away the cycle indicator and show you how to trade it and so forth. So it's about an hour, actually about a 15-minute recorded webinar, and I actually walk you through how to modify the indicator, set it up, and how to trade it. And you don't have to go to any other website, just go to rubberbandtrade.com and you get that as well as the rubber band trade strategy. You get everything.
All right. Okay, awesome. Yeah, somebody was saying that once they get onto Rubber Band site, it's not letting them in after selecting their market.
Interesting. There should be another button there, maybe. Wish I had my
contact support
browser up. Yeah, can you go there, Sherry, real quick and see if it lets you in? It should. I checked it before we came on and it worked. For me, I like to always double check. I don't have a web browser up right now, so
all
that's
right, just a second. I'm going to it. It's
with
rubberbandtrade.com.
Yeah.
And I'm using Brave as my browser.
Oh,
so
really good.
I've got Top Dog Trading, the Rubber Band Trade, stocks, forex, futures, options. I'm going to try futures.
Okay.
And yeah, it's not going anywhere.
Really? Okay.
It lets you pick it, but should there be a button down there to go to submit?
Yeah, I'll have to double check that. There should be.
Okay.
There should be. So I apologize for that, everyone. Just send me an email, Barry@topdogtrading.com, and we'll take care of you. We'll make sure you get that.
User error. Oh boy.
Yep.
All right. Pip says it worked for them. So some see it, some don't. It may be your browser, folks. Try Chrome, try Edge. I was working in Brave. It's a new kind of browser with better security and privacy on it. So that may be why. I've noticed on a few things, especially banking sites, they do not like anything but Chrome. So
yeah, Chrome is kind of the.
I mean, I think you presented a lot of great information here. I hope everybody will take advantage of looking up rubberbandtrade.com. You can email Barry at topdogtrading.com. And I hope you'll join us again in the future, Barry.
Well, thank you. It'd be my pleasure.
All right. Well, you have a great day, and we'll just get on. We got two more people to bring in, so I'm real excited for that.
Excellent. Thank you so much.
Thank you. Have a good day.
Bye-bye.
All right. Let's see. So I just want to remind you that the recording is going to be available either later today or in the morning at tradersexclusive.com/archived_webinars. You can see that right here. You go into this little, go to here where it says here, and you'll be able to get to that page. So our next speaker is joining us, and she is going to talk to us. It's Dr. Julie Manz of Traderinsight. She's going to be talking to us about mind over markets, the psychology. And Julie is the co-founder and contributor at Traderinsight.com. She's been a successful professional equities trader for over 2 decades. She provides education to serious traders who are looking to add intraday trading to their repertoire. For nearly a decade, she's been training mastermind members in the elements necessary for successful daily income trading. Julie has a Ph.D. in social psychology and is an expert in trading psychology, helping traders in all markets to be more effective with their strategies. So we're really super glad that she could join us. You know, a lot of times I think that it's the mental side that really determines who's doing what. Now, Julie, I'm going to have a hard time here because I have you in the meeting about 4 different times. So I'm not sure who to turn on. Oh, I see you now. Okay, here we go.
Okay, now how am I sharing my screen here?
I'm going to make you presenter right
Okay.
now, and you should be able to now share your screen.
Okay. Hold on one sec.
You're muted, Julie. Sorry, you're self-muted.
Oh, hold on, Sherry, one second. This is the presenter mode. I just want to switch screens over here and see if we can get
Okay.
onto the cleaner version. Swap.
All right.
Okay. But now you see, okay, let me put this over here. All right. Hi.
So I don't see your screen yet.
Screen.
There we go. We got you.
Okay, so now I don't know. I can do a webcam. I don't know what that looks like. Do we want to try that?
It's totally up to you, whichever way you're most comfortable. It'll probably be at the top of the screen if you do. So it's up to you, whatever you want to do.
All right, let's take a look, and I'll say hi to everybody anyway. Let's see here.
Is it? There we go. I can see your oil crayons.
Isn't that nice? All right, hold on. How do we switch this around? Oh dear, webcams. This. All right. Well, this might not work. It would need to face me.
We believe you're really there, so it'll be okay.
I am really here.
Thanks for rejoining us today.
Okay, well, listen, let's just go on and get to it. I am going to share today the psychology to trade successfully. And I believe we've talked before about this, but it's one of those things that I'm super passionate about. So let's do this again and see what more we can learn. There's so much in this whole area. So here we are. This is, I say we, that's Adrian and I. We are been trading since the beginning, since 1997, when you could start doing some online trading, and we thought it looked interesting, and it sort of developed as online trading developed. So we, Adrian read everything he could about different patterns. We have some dynamic strategies, some that we have used, all of them really from the very beginning, but we have developed them as markets have changed and grown, and as the online market has changed and grown. And so we have courses. We are both Ph.D. Students. We started trading as we were graduating with our degrees in psychology, and it was a great natural fit. So we are also used to teaching, you know, so I mean, that's what you train to do as a professor. So one of the things we love to do is share what we know as we teach, because as many of you might have experienced, trading in your own house and online can be a little bit isolating. So it's a lot of fun for us to work with mastermind students. And we've had about 10 years of doing that. I'm going to show you a picture here of our boot camp, and several of them. We've had, I think, 16 of them now over the last almost 9 years. This 2020 situation has given us a little bit of a pause, but we are scheduled another one for May. But two things I want to tell you about this. One is adult learners need something different. So as PhDs, what we know is if you want to learn as an adult, you need these things that I have listed here. You need relevant material. You need to be actively involved. You need to get immediate feedback, see the real world benefits, and be able to practice. And that's part of what we're going to talk about today in terms of psychology, what's super important and what sometimes feels not as exciting as the rest of trading, but that practicing is actually what is going to get you further than many things. And I'll tell you why with the brain. So here's what I want to talk about today. I'm going to go over fairly quickly how I see trading as a business from home, whether you're trading stocks or anything, you know, Forex, whatever. You can organize or think about trading in this way. And this is where I've started with a lot of our students, is to try and figure out, okay, where, if we can pull apart the pieces of trading, then what we can do is understand where people are having their challenges. So we're gonna talk about that real quick. And then we're gonna talk about cognitive behavioral therapy and mindfulness as solutions. And if you're already starting to think, oh my God, really? I'm gonna tell you, you are gonna thank me in the end, because these are things that you can do for yourself with some tools we're going to give you, and you can start to work out your challenges in your trading. So, and if you want to take that to the rest of your life, that's good too, but I'm here to talk to you about your trading and how you can sort out different challenges you face so that you can become more successful or more consistent also. And then we're going to talk a little bit about having a trading plan, and if we have time, we'll do some strategies in psychology, but there is a lot of, our website is completely deep in content. So I'm going to give you Traderinsight.com, and Adrian has videos on the strategies that you are more than welcome to go and check those out too. All right, first of all, let's talk about a successful trader. So we have a group understanding of what we're saying a successful trader is. So this is what all veteran traders, if you read things from 20 years ago or to today, this is three sort of areas that are distilled into what is a successful trader. So you need to understand the playing field and the risks. So whether, you know, depending on which markets you're in, you need to understand that market and what risks are involved, of course. And then you need skills, strategies, and tools so that you can maximize your success and minimize the risk that you understand you have. And then on top of that, you need discipline and you need a trading plan. I can't emphasize enough how important it is to go out into the trading day with a plan. Okay, so along those lines, we have a 14-day challenge. So you just go to traderinsight.com/challenge, and this is just a fun one. I mean, you'll see our strategies because you can come into the room and see what we're doing, and you'll get those plans every night. But this is to really get your head into the game. So we have assessments that are self-assessments. You're going to go ahead and you'll get a login, and you'll get a dashboard that has those assessments on it. And you take that, and then you're emailed back your scores. And that's a lot of fun. And then you'll see our strategies, and you'll have access to come see us trade live. And that's super important. So we just get together every morning for about an hour when the market opens. We have a strategy, and you'll see what those plans are. And a lot of it are our alumni, and we are trading together live, and you can just enjoy it. It's not it's a Zoom, but it's just an audio Zoom. So you can also talk to us after about the first half hour and actually ask your questions live, but it's not on video because it's 6:30 in the morning here, people. I'm just trying to be on video just now, 6:30 in the morning. It's even worse, can't do that. So anyway, so that's fun. So do that, come and do the challenge. It's, you know, just free, whatever. Okay, so I told you we're gonna have tips for success. And this is just an acronym for technology, information, strategy, and psychology. And if you think about this Venn diagram, those 4 categories, if you think about 4 boxes, those all fit inside of psychology, because really the only thing you're bringing to the desk every day is you, right? The information might change, your strategies change as you grow, or you find one with a better psychological fit. Your technology needs to change, and we'll talk about that in a second. But you are the piece that influences all of that. And if you can pull it apart, then we can start seeing where maybe challenges stand. Like some people have a hard time placing a stop. And my question is, do you actually have a hard time placing the stop physically? Do you have fumbly fingers? Are you not good with technology? Well, we need to address that in a certain way, as opposed to, you know, do you not have a strategy and are you not following your strategy? So this is kind of a big slide, but we're just gonna start with these first 2 on the left and quickly go over technology and information. And I've got just a couple of things that you need to know, and then we'll come back and go to the meat of the matter, which is the psychology and strategy. Most important thing in tech usually is your computer. It's really computer, internet, and your software, right? So I'm not recommending any one of these things. This was a search for best gaming computers of 2020. The optimal word here, and what I should have highlighted, was that word gaming. You need, you're dealing with a lot of graphics, right? The charts, think about charts, do look like video games. So when you're getting a piece of equipment, make sure that it has a great big GPU. And if you haven't got a new piece of equipment and you're thinking of trading actively, then I think you really need to upgrade and let the computer you have, you know, go to someone else, maybe in your family or somewhere, you know, that needs a computer in this day of Zooming from home. But consider that when you can't win a race. If you're in a race, Adrian always says, you know, if you're in a car race, you're not going to want to be in the family sedan, right? So what you're going to need is to understand what you're doing in trading, and if it involves any kind of speed and any kind of graphics on a timely basis, go ahead and upgrade yourself to a gaming computer. Software, really quick, a lot of people use brokers, and I trade stocks, so that's what is represented here. But sometimes your software is your broker, and sometimes there's software plus a broker. We do the ones on the right, which is software, and then we have a broker. We use ES and then Lightspeed because that's how we started. And then your software can be ported to different brokers. Other people, of course, are integrated with their software and just sort of understand the difference of those 2 things. Information, I'm just going to go over 3 things. We are really looking at needing to have market-specific news. So if you say, oh, I watch the news, and if you're like most people, you watch it way too much, the cable news, I'm not talking about that. That's entertainment. What I'm talking about is news you need to trade in the markets. So on the left, I have the fly. We like the fly on the wall. It has very specific news for each of the different things you want to do. Maybe you're in a different market and you need, you know, specific news about that. That's fine. On the right, I just use this for pre-market, either CNBC, sometimes Bloomberg, whatever's going to give me a quick snapshot of what's happening pre-market. We set up before for some of the strategies we do, so I need to know what's going on there. I also like to tell people, and this is sort of my disclaimer, I heard Sherry do that in the beginning, but I think it's really important to understand if you're trading as a retail trader intraday, this isn't developed for you. The stock market in general is not developed for you. So just understand why it was developed, you know, raising money for other companies to expand their business, and then yes, how it morphed into what's going on right now, but it really still isn't for the retail trader. It's not for me either, right? So that definitely what you're wanting to do is work with that system. We follow the whales also. We're not trying to beat this. We are absolutely going along with the markets and working with that to find our edge within that. And finally, in info, I run across this a lot, that people, a lot of young people, but sometimes folks who've had some experience too, forget that this is not a bank account. This is not a savings account. And it's not fair. It's a place where you can make or lose money, and I think most people understand that, but it bears saying, because I can't tell you how many, especially young people, will come and say, "But I lost money, and why?" Because it wasn't properly, you know, explained to you. It's been marketed to you in a different way. Okay, so let's go on to psychology, and let's try and figure out, why is trading so psychologically challenging? There's 4 sort of main ideas that when I talk to all these people, all our alumni from over the years, and even when we're at conferences, or when we were at conferences and we got to speak with people, and you get to try and tease out, what is it about this business that makes it like other things more challenging than other things? Well, for one thing, it's constantly about capitalizing on opportunity. And in other businesses, of course, you need opportunity, but it's not every single transaction. Every transaction in trading involves reaching out for that opportunity, and then it can whack you psychologically if you get disappointed or regretful. We talked about that last time, and it's better to be regretful than disappointed, because you can change your inputs. But either way, it doesn't feel great. Now, of course, you can, you know, feel good about your opportunity too, but every single time there's a choice, and that's not like most other things in human experience. Also, it's about working smart and working hard, but also smart. Showing up is not, you know, sometimes there's, you know, the statement, well, showing up is 90% of it. Well, that's not for trading. That's totally different in trading. You actually have to be smart once you get there. And sometimes being smart means you're not going to trade that day, but it just means your brain's got to be on. And if it's not, then the smart thing to do is to not trade at that particular time. And it's also not like anything else you've done before. A lot of people are really good at what they do, and they've spent a lot of time doing whatever it is they do, whether, you know, it's a physician, or operating a crane, or you know, whatever you're doing, whether it's whatever type of job it is, you usually have a lot of time doing it. And yet everyone will come to trading and think, oh, I can just do this today. A lot of times I think it's because they think, this is for me. I don't have to work smart. I don't really understand what it is, and I'm going to be able to do this today. Lastly, I think it's because it's imprecise in a way that is confusing for people, right? It's more like sailing a ship. And when you're sailing in a ship, you know where you're going, and if you have spent the time, you know what your instruments are doing, and you know what the theory is for the sails and the wind, and how you move all that around, and you understand that the ocean is constantly shifting under you, and you're going to need to know something about that. And still, and you know it's dangerous, still none of it's under your control. So you can know everything you can have. All of this is on your end, all your knowledge, all your skills, and yet the elements are still out there that you have no control over. And I think that's very confusing for people also, because again, they want it to be fair. They want it to be something that it isn't. And for our folks who are software programmers, they want it to be mathematical, and it isn't. And for our folks who are entrepreneurs, they want it to be something where their personality plus and acumen can sort of nudge the market one way or another, and it's certainly not that. So those are sort of the 4 basically giant challenging things about this as people approach it. So psychology, how are we going to address it? How are we going to get better at what we do? First, just let me say, with psychology, psychology is like this 2,000-year-old story of some blindfolded people trying to describe an elephant if they've never seen an elephant. And they describe them in vastly different ways, depending on what part of the element you're touching. You know, the tusk might feel like a spear. And I loved this quote from something that was laid over this little poem that was laid over it years after the parable. And at the end, it says, though each was partly in the right and all of them were wrong, because they didn't have the whole picture. Well, psychology is a little bit like that. These are 7 major areas in psychology here, disciplines in psychology. Each one of these explains some of human behavior perfectly, really perfectly. Not one of them explains it entirely. So we're going to take a few of these pieces out and work with them together. So if you look at humanistic is your positive psychology, your hierarchy of needs, your humans can develop. It's a more positive way of looking at human development. Once your needs are met, you can self-actualize, you can grow personally and professionally. And psychodynamic is your classic Freudian, you know, therapy about the id and the superego and forces within you. And of course, also talking about your childhood. Behavioral psychology is much more operant conditioning. Ring the bell. The dog salivates because you paired that with feeding the dog. Cognitive is all about the processes, the millions of processes that go through our brains constantly, and we're going to talk about those. Biological is obviously by just what's happening with your synapses and your blood and your heart rate and all that. Cultural, the things that you learn through culture, and then of course evolutionary is how we developed. So I have a little brain off to the left on this slide because the really exciting work that's gone on recently is in neuroplasticity. So what they have learned is that the brain, this is over the past 10 years or so, and it's exciting in a bunch of different fields, and I'm going to bring it here why it's exciting for us in trading, is as the brain is continually reorganizing itself. They used to think you could develop till about 30, and then your brain stopped growing or reorganizing, and that's not true. So they've done scan after scan and brain slices and all kinds of things that show your brain is constantly reorganizing itself. And that's what the little brains on the right are doing, they're working out. So if you do some work to get there, all right, so how does this work? So your synapse activates, and you could either go to the right, and if you activate that with a thought or with a behavior, and it's strong and frequent, then it actually changes the structure in your brain and can strengthen the connections. If it's a weak activation, you rarely do it, you rarely practice, you don't think about it, then you're not going to change your synapse, and sometimes those can even fall off. Here it's talking implications that for education and that seminar style training is not enough. Well, that's what I was telling you about. You know, that's why we have a year-long program, because you're not going to sit down in a seminar and learn everything. And in fact, our boot camps, when our guys do the year-long program, it ends in a boot camp or wherever you are in the program. When the boot camp happens, you attend, but it's actually every boot camp in the future. So we usually have a quarter or so, or maybe sometimes up to half of the people at the seminar are alumni, and that's just included in your first training, the first year of training. It's included that you can go to all the rest ever, because they always, when folks come back, they say, okay, I had this one tool, because we have several tools in our tool belt. Now I'm going to go pick up this other tool. And that's really, again, adult learners learn that way, and you learn by repetition. Also, I want to say that in here it says using technology. We really encourage people to use simulators when you're not trading. So maybe even if you trade every day, if you are doing something that is highly technical or needs some skill in terms of timing, we have an Apple trade. We have big NASDAQ supercap trades that Adrian has. It's a scalper trade, and you'll see that if you come to our 14-day challenge. But it's we have a simulator, and if Adrian doesn't simulate the trades, he doesn't even trade. And he's been trading and teaching training for trading for over 20 years. So it's an ongoing process, this neuroplasticity. Okay, it's exciting, and a lot of the researchers are using it in various ways, including, it's exciting for people in stroke research or addiction research and all those other things. But it can also be used in a positive way for traders, and that's where I'm trying to bring it. So again, Your brain keeps generating things. If you use new skills and have new experiences, your brain physically connects in different ways, but you need to have repetition and practice. And then the connections that aren't used become weak. And that's only a bad thing if you don't want those. I mean, if you do want those connections. If you don't want those connections, that's really good news, right? So if you have bad habits, the less you do that habit, good news there. Eventually that'll physically, that chain will be weakened and fall off. Okay, why is this important for trading? Almost everyone in trading will say you need to be positive, and we'll come back to that successful trader in a minute, and I'll show you that. But a growth mindset is one of these things that has grown out of it, and it was a lot with research with kids and students. And if they believed they could do it, then they actually could. And that's important with trading, because if you have this fixed mindset where you don't think that either you can learn or you give up easily or you avoid challenges, boy, this is not the career path for you. And it's really not it's not a healthy way to have a brain. A good way to have your brain just necessary for trading and in life in general is to embrace the challenge, to understand, you know, the feedback given to you in a way that is not threatening, and to put out that effort to build new skills. Okay, so which of these pieces of this pie are we going to go ahead and take out and try and find some solutions to our challenges? The main ones are the humanistic. I'm going to talk about the mindfulness, and the cognitive behavioral together make the best team. It's a little nod to the biological, right? We just talked about neuroplasticity, and a little bit to evolutionary, and I'm going to show you why that is also. Cognitive behavioral therapy is used for a variety of things. The reason I like it for psychology is it's about today. It's not about going back to your childhood. It's not about you know, spending endless hours doing exercises and things that aren't going to affect something right now. This is great for traders. This means we are looking to address current problems and how you can regulate and develop those tools. So if you notice, there's arrows that go both ways to all three of these things. It's the triangle. Your behavior, your thoughts, and your emotions, or your feelings. And so as you're sitting in front of your computer trading and you have certain thoughts, and let's say I'm going to take this trade, I'm going to use this order entry, and I'm going to take this trade. And if you follow through on that with your behavior, then you'll have a certain feeling about how that went. Well, I followed through on that, and I placed the trade correctly, and it didn't work out the way I wanted it to. And so then you could say, well, next time it'll be better. Or if you're outcome oriented and a fixed mindset, you'll say, you'll be upset and things go downhill from there. You won't place the next trade. You aren't going to, you know, feel good about the next trades. This is a super important triangle where your thoughts, behavior, and feelings all have to work together and work in the background. So let's look at a couple of the cognitions. We have cognitions that go through our head. We have thoughts that constantly go through our head. And the important thing about that is that they aren't facts. So every thought you have, although I'm sure you're a genius and a wonderful human being, your thoughts are just opinions. My thoughts are just opinions. And we opinion ourselves to death a lot of times, and especially with trading. So here are some of those ways we do it. So on filtering, you're talking about focusing on the negative and ignoring the positive. Now, there's actually a biological reason for that, and we're going to talk about that in 1 minute. But catastrophizing. Everything is the worst case scenario. Oh, I lost 10 cents on that trade. I can't believe it. I'm not going to be able to trade all day. You know, it leads, and then that thought leads to a behavior and also then an emotion. Polarized thinking, it's all or nothing. I'm going to make all this money, or I'm not going to make it, or it was a good day, or it was a bad day. That's also not a great way to think about your trading. It's not going to foster longevity in trading. Always being right, obviously, is never going to happen in trading. You are in some ways, you are going to be wrong, right? We'll sit there in the morning, and I tell them in the room, I'm like, you know, I always said this is the only business where you can always be wrong. If you made money, maybe you should have made more money. If you didn't make money, obviously that doesn't feel good. And the money part of it actually has to come out of it. And then we'll also address that in a minute. But anyway, you're not always going to be right, but that's something that maybe cultural psychology, especially in the Western world, is very, very adamant that you have to be right. And that's, it's not good for trading. Fairness, obviously this isn't fair. jumping to conclusions about what happened. Oh, that's because there was a news in the market. It's not actually helpful always to know why, or to have to trail it down. It takes you down a different road if what you need to do is blame, right, and find something. And then emotional reasoning, I will say, is not great. Again, your thoughts are your opinions, and your emotions don't make whatever it is true. Like you're not always right. Your body's not always right. Your thoughts are not always right. You have to take a step back and realize that what's going on in front of you isn't exactly about you, and how am I going to interface with this trading and not get overwhelmed with it. So when we started trading, that was one of the things that we knew as psychology students, is that there were all the cognitions that were going to go through our brain, and all of the emotions and things that go with it were not going to be things we could do and actively trade, especially at 6:30 in the morning. So that's why we had a plan. Okay, we're going to get there. So why, but let's go back to this focusing on the negative. It's a real, in all of our human interactions, the negativity bias is very giant, and it's giant because of evolution and evolutionary psychology. That's what I was going to say, right? You all know about fight, flight, or freeze. So your brain wants to activate that while you're trading, and this is the thing we need to address and find good strategies to back off from that and be able to think rationally about what's going on in front of us. But we evolved to do this. So I have this picture of the lion here because one of the pieces I was reading, and I thought it was a really good analogy, was talking about it's as we developed, on the savannah, and our advantage as Homo sapiens, right, is to have a opposable thumb and to have a big brain. But we can't outrun anything that's there. We can't outclimb anything that's there. And so anticipating trouble is really what we are designed to do. So if you look over and you see a beige rock behind a tree, there's two things that can happen there. It's either a beige rock and you don't know if it's a lion, but if it is a beige rock, you're okay. But if you look over and that beige rock actually happens to be a lion and you didn't anticipate trouble with that, then you're not going to be our ancestor, right? So, and research just shows, these bad experiences are like Velcro and good experiences are like Teflon. In studies with mice, they find that if the mouse runs through a maze and gets to an area and gets a shock, it only takes one time for it to learn about that shock. If it runs to another part of the maze and there's a treat there, it takes about 5 times to remember how to get through the maze for the treat. So this is hardwired into us. And so our challenge as traders is, how do I separate myself from this fight or flight or freeze? Mindfulness is one way. So we've got cognitive behavior on the one hand, and I'm going to show you solutions that cognitive behavior have. They have a toolkit. And then we have mindfulness on the other hand, and that has a lot to do with various things. But in essence, getting your mind and body in the same place fully and being present. And I think a lot of times people don't think that trading has to do with being in the now, in the present. They think that might, they think of it as a hard buy, sell, in the pits, waving sheets and wanting to get your orders filled, and aggressive maybe. But in truth, as you sit in front of your computer, no matter what you're doing, whether it's fast trading like we have on our scalper plan, or setting up and executing more of an intraday swing is another style we have. We have a couple different styles of trading in what we do. But what you need in all of those is to be focused, to monitor yourself. So it's a focus, and it's a way of looking at the trade and letting other ideas just flow by. And then, of course, an acceptance. And this is something that I'm going to talk about a little bit here, is self-compassion, meaning self-acceptance, is actually super important for traders, because it leads to all these other things that allow you to be flexible and keep being a trader. All right, so it's meditation. The point of it is somatic quieting, so getting your body quiet. Again, the concentration, the acceptance, and then connection to, in meditation, sort of connection to the larger picture, and if it's just a general meditation. But what I want to talk about in terms of trading is its connection to the market in front of you. So part of what you need to be connected to is what's happening in what I'm looking at. And of course, the faster it's moving, or the faster the trade, like in our NASDAQ trades, you have to be a lot very connected. If you have more like a swing trade, a day over day trade, then you still need to be connected and sort of feel what's going on. You know, our options traders that are good at what they do, they're a bit more connected to those bigger rhythms that move along. So the self-compassion, like I talked about, there's a whole lot of research, and if I put it all down here, you would just say, oh my God, this is just getting boring, because it is overwhelmingly positive about having this self-compassion. I highlighted the ones here that are really very important to trading. Optimism and a positive affect are linked again and again and again to successful traders. Personal initiative, that's this whole business, right? Is you have to be self-motivated in this entire endeavor, and you have to be curious. You have to look and see what's going on. You have to wonder if something is a better way to do something, and then actually test it out. And then conscientiousness, one of the scales you're going to get when you do our Traderinsight /challenge is a scale that one of the measures is conscientiousness. And if you're very high in conscientiousness, spoiler alert, then you are in a good spot to be a trader, because you are willing to self-monitor, to look at the trades, to be careful and look at what you're doing. So the psychology to trade effectively is, I'm saying it's this trilogy between mindfulness and cognitive and behavioral approaches. One, because they're things you can do right now. And we're going to send you also some tools about assessing your self-compassion, and also some tools for mindfulness, so that you can really start to understand why this is important in just focusing, and you can work on it yourself, right? You don't actually need to go out and get therapy. Not that I'm against it. Believe me, as a psychologist, I think that's always a valuable thing. But what's cool about this is that you can do this coaching almost with yourself or with peers. You know, you can talk about it. So we're fighting evolution because we're predisposed, like I said, to the fight, flight, or freeze. And the fight part is linked to self-criticism, and that is a fixed mindset, and that's not going to get you anywhere trading. What we need is this growth mindset, and we need to be present when we trade. So what are these common challenges we have? And then I'm going to tell you some cognitive behavioral toolbox things that can help to work on those things. So do you recognize yourself anywhere here? I do. Fail to pull the trigger on a good setup, let losing trades run, add to a losing position using hope, morning profits, afternoon losses, taking unplanned trades, waiting for that home run, the big trade to hit, or reducing your position size after a loss, cutting a winning trade short. I'm trying to think if over my 20 years, there's one of these things I haven't done. I don't think so. I think I've done all these things, except adding to the losing position, we don't really do. But I know that's a strategy for some people, so that happens. And the morning profits, afternoon losses, that's something that some of our traders tell us that they did, and that's a nice solution. That's a one-stop shop solution where we say, well, get up and leave. You made money in the morning, now you got to go. Although for those people, that can be a very challenging thing. Okay, so here are some of the tools in the toolbox. I highlighted about 3 that I think are good and useful for, about 5, about half of them, for traders in particular. So journaling is a must. You need to be able to write down in a journal what trade you took. So a lot of people do spreadsheets, and that's okay. I would love it if on your spreadsheet, what you could do is also write down what your thoughts and then what your emotion was with that, because that's going to go a long way to you seeing, oh, when I do this behavior, this is the thought and emotion that comes with it. Breathing is always helpful. I mean, no matter what, whether you like the idea of meditation or just good old-fashioned breath. And then progressive muscle relaxation. You can listen to some guided relaxation. Also, what's the worst that can happen? One of our traders was saying he was doing some cognitive behavioral therapy and with a coach, and the coach was saying, well, I think you need to say, what's the worst that can happen? Like if it goes to your stop and you've positioned correctly, you already knew what your risk to reward was. That's going to be the worst that can happen. You know, it's not that you're going to lose your house, because it's going to be like $300 or, whatever, even $3,000, whatever it's going to be for that trade. That's the worst that can happen. And taking it through to the end is sometimes a useful exercise. Again, log, trades emotions. If we had the webcam, if I could have figured out how to flip that around, I'd be showing you my trade sheets every day. We have a gouge sheet we print out, and it has all our intraday swings, and it has our really fast XRV, these expansion of range and volume trades that are pretty explosive. And then I write down all our gap trades that come in, and I journal right on the paper in front of me. And I think someone has a microphone on. Okay, so having journaling is really great. And then also, if you can plan the trade, trade the plan. That's been our motto since day one. And having a plan, there is no substitute. So you need a trigger and 2 exits, and then to know your risk to reward. And you can see on our trading plans, this is how we do it, because it's 6:30 in the morning, like I said. Adrian's a trapper. When he developed these strategies, we don't go out and hunt momentum and hunt things during the day. What he does is look and see what the setups are for 3 different strategies, well, actually 5 different strategies. And then we look at those and we say, okay, this is what we're going to look. We're only going to get in if it triggers. And we have precise entry trigger criteria, if it's below the stock, if it's a long, or above, if it's a short, that sort of thing. If you have a plan, a lot of these problems go away. If you have a plan, you have the opportunity for these problems to go away. You have a strategy for those to go away. You need to follow the plan and be disciplined about that, and then trust the plan and follow through on the plan to have many of these problems go away. But in the end, the worst that can happen is what you already knew what could happen, right? So if you follow that through, you're like, okay, if all of these things triggered me and I went to a stop, this is the worst that can happen, and only this, right? Because I have a stop loss, because I'm managing risk. We have on the site 16 years of results. That has not ever happened, right? The results are always, they're great, and you'll have opportunity to look at those too when you come to the back office. So here's your successful psychology for the things we talked about today. And I think we only have a few minutes left, so I'm just going to go through that real quick. The flexible thinking and growth mindset is really important, because it sets you up to be able to learn new things. And you need to know you need to learn new things. And I told you why you can, because your brain is set up for it. You need to follow your plan, because that's the only way that you'll know if you're being successful or if the plan is successful. And the only way to get over some of these bad habits and to strike these new paths in your brain to follow good habits. You obviously need to be self-aware and focused. I have some students that would say to me later on, well, I have a real problem with attention, and that's a different strategy. And we work on ways to keep them engaged. You know, if you're in a trade, maybe you have a soda can turned one way, and if you're not in a trade, you turn it upside down. Something physical so they can look at it. But there's a million different ways we can work on that. But as long as you know what your issues, you know, your challenges are, let me say. You need to be self-motivated, passionate about trading. That's something that is well shown in the literature, and then positive and with self-compassion. The other thing is self-compassion actually equals patience, if you think about it. And most of what we do as a trapper is sort of sitting in the tall weeds. We're the jungle cat, right? Sitting in the tall weeds. So we talked about the playing field and the risks and the skills and tools you need also psychologically. You need to have the discipline. The tactics and the trading plan, those are strategies. And like I said, if you come to Traderinsight.com, if you do Traderinsight.com challenge and you come join our 14-day challenge, we're going to send you a mess of assessments, and you're going to be able to self-score those. We're going to, this Friday, have a Zoom meeting for the folks that were doing that, and then also, you know, you guys that are doing it. I don't have time to get to the strategies today, but Adrian has videos on just our homepage there where you can go ahead and have a look at that and see what we're doing over here, because we have a lot of very happy customers. It's all the plans we trade ourselves, and we've done this 20 years. But what we've also learned over time that we really need to address the psychology, and we love working with people, and it's just a joy to see them in the room. So I hope you join us and come in and at least stop by and see us in the trading room.
Oh, we have a bunch of questions for you too, Julie.
Oh, cool.
I've got one from Cody. What's the best way to improve my trading psychology to avoid analysis paralysis? I seem to want too much confirmation to make my trade.
Oh, that's a good one. Hello, Cody. I know Cody. So I appreciate that, though, because in the room, we're mostly focusing on trading in our trading room. So I think it is journaling. I mean, I think it's helpful if you start your spreadsheet, right? But then also start to put down what you're thinking as you're writing it down. So if you're looking at a particular stock, and I know you do some longer term stuff also, and if you think, okay, what are the pros and cons, or what are the threats or opportunities in this particular trade, and you can write that out, and then also add this next layer of, what are my thoughts about that? What's the worst that can happen with that? What are my emotions around that? And then you might start to come up with a pattern about what's going on, because, or you might find that there's one kind of a thing you look at that you find makes most sense and takes away the paralysis. Like, oh, if there's a certain moving average over a different moving average, that tends to work out, and I like that. It's really about data. It's a lot about data. We'll talk about that more in the room, though, Cody. I love it.
Okay, cool. And then Mark asked, Marcus is about a 3 or 4 parter, and intuitiveness fit in. Some thoughts from perhaps higher realms. How about all 3, using these to your advantage? Now, he may have been speaking as you were talking, and I apologize. I did tag you with them, but I don't like to send over questions in the middle of your presentation. So
no, I appreciate that.
And
so I think if I understand correctly, I think yes, you use all 3. And what is important about being present and about meditation is sort of and quieting the cognitions is you're not actually trying to not have a thought. If you try and suppress a thought, let's say about a yellow bus, all you're going to think about is a yellow bus. But what we're trying to do with this meditation, and sort of think of it as a river, is just let the bus drive by. It's okay, the bus is there. Just let it drive by. So the thoughts that might interrupt you, we're going to let those flow past. Like one yoga teacher once said, if you're on a train in Europe and there's little towns that just sort of pass by, you just sort of let your thoughts pass by. But you're talking about intuitiveness, which there is some intuition in trading, and it is that higher cognition, but it's also about being connected. So it's that connectedness as you see, let's say I'm trading BABA, and as I see, and I have bands that that are set up from the night before that you guys can come in and see. And as I'm watching that happen, it's almost, I'm watching the order flow, right? I'm watching the tape, and I'm trying to be connected to what's happening there. And as you see it almost like a swing, if it's sort of reaching, because BABA sort of is more like a channel trade sometimes. If it swings up and it starts to lose that momentum, then the intuition kicks in, and you're like, okay, I'm just going to close out this trade here. I hope that answers that, but you can always email and ask me, or come in the room and ask me. Come on.
Yes, that's great. I really appreciate your time in here today, Julie. I hope everybody, I put it in the chat for the entire audience, tradersinsight.com/challenge. So they can come in there and get their heads wrapped around stuff.
Good one.
And thank you so much for joining us. And I really appreciate it. And I hope you'll come back again.
Absolutely. Thanks, Sherry. Bye-bye.
Have a great day. All right, everybody, you're sticking with us. And I'm going to bring out our next guest, who is Marina Villatoro of the Trader Chick. She's going to be talking to us about 4 steps to simplify your day trading and understanding the power of the breakout trade. And please excuse the background. I have an assistant with me today. Oh.
Hello?
Lock that kid away. I just wanted to finish, Marina, your bio I got was Marina, the Trader Chick, is an international speaker on stages such as the Money Show, Ninja Trader, and Traders Expo. Plus mentor and teacher to over 700 students. She's been trading and teaching the financial markets for years. Marina started her trading journey on her 40th birthday when she jumped in with both feet and started back trading ES minis in the futures market and has not looked back. The journey wasn't easy, and after losing her entire account one day, in a matter of minutes, she had a massive breakthrough. She's mastered the art of simplifying day trading. And I'm going to make you the presenter now and mute myself. Marina, are you with us?
Hi, yes, can you hear me, Sherry? Hi.
Yes, I can hear you. Thank you so much for joining us.
Thanks for having me. Hang on one second. Let me just share my screen here. Is it possible to have my questions available to me? Because I actually love to have questions during my presentation.
What I do is I can pass them over to you because I don't know how to make you be able to see them any other way. That they'll come through to me and then I bring them over.
Oh, okay. So you put them in the chat, you mean?
No, actually, if I tag you, you'll see it'll pop up under the questions panel.
Okay, let's try it. If not, then you'll just read them off to me later.
And also at the end, I will try to give them to you. But I do, if it looks like it's going to lose context, I will interrupt you. I just hate to interrupt a presentation.
Okay, no worries. Okay, so let's begin. Hang on a second. Let me just kind of get myself organized here. Hopefully everybody could see my slides. And thank you so much for having me. And thanks everybody for joining. I'm very, very excited that you guys are all here. And I do love to have questions. So if we could have during, great. If not, I'll answer everything at the end, because the goal of me being here to present is really for me to be here for you guys, because I know that the reason why you're all here is because, you know, there's some struggles, there's some challenges, and I really love to address that and help you as much as I can live. So either way, we will get to your questions and let's begin. So welcome to Simplifying Day Trading. Today, I'm going to talk about the 4 steps to simplify your day trading and understanding the power of the breakout trade. So hi, I am Marina, the Trader Chick, and that's me with one of my favorite little humans, one of my sons. And what we'll cover today is understanding market movement, using indicators for best entries and profit targets, identifying and the profit and the breakout trades, basically how they work, and scalping, how scalping has helped me become a totally profitable, confident trader. And if you guys haven't heard of scalping, I really would love to kind of just introduce the notion of it. It's a strategy which I will get into in a little bit. So before we jump in, I do want to give an official intro so that you kind of have an idea who I am. I am Marina, the Trader Chick. I am, excuse me, an expat living in Antigua, Guatemala. So right now I am chatting to you guys through in Guatemala. This is my family. And I'm also trilingual. I was actually a refugee from the Soviet Union over 40 some years ago. So I speak Russian. That is my mother tongue. However, because I was raised in the US since 6 years old, so a very long time, English is my main language. And I have now been an expat living in Central America. We first lived in Costa Rica for 8 years and now going, oh my gosh, almost 11 or 12 years in Guatemala. So I speak Spanish fluently, right? So the reason why I bring this up is because it really helped me recognize that the markets are actually like a language. And if anybody here has ever learned a second or a third language, but later on in their older years, it's different than when you're tiny, right? Like English to me, I learned it within 3 months, I was fluent, but Spanish I learned in my late 20s. And you know, the first year of really learning, everything had to be translated to me. Before I said anything, I had to translate it first. But then one day I woke up and it's as if though I just understood, right? I'm not 100% fluent, but I just understood. So there's no more translating going on. You just get it. And that's kind of what happened to me with the markets. And I think that we could all do that, especially when we start to realize that the market is actually a language. And before I was a day trader, I was a fitness instructor and a travel writer. And why do I say this? Because I cannot even tell you the amount of times people ask me or tell me, you know, oh my God, I don't have any financial background. I don't have any math background. I was a fitness instructor. I was a pro aerobics instructor in Manhattan gyms. Anyone can do this. That's the beauty of day trading. And this is what I still have my travel site. So I actually started travel writing on my own website almost 14 years ago. You can still find it here. So I still do that because part of what trading allows me to do is travel. And that was the coolest thing of all. So what I really want to talk about today is the language, right? About the market language. Here's the thing, guys. If you don't know how to read the charts it will not, you will never be successful. And I'm not saying that to be in a mean way. I'm saying it realistically. If you get into a car, and actually I am in a really beautiful position right now. My oldest son is 16. He is literally learning how to drive right now. And whenever he gets into the car, he doesn't know anything, you know, like he doesn't know where the clutch is. He doesn't know how to change the gears. He doesn't know where the brake is. He doesn't understand how to press the accelerator. Things that we have completely made, they're natural to us. They're automatic. But the reality is, it's a language of the car. When you get into a car and I say to you, hey, hit the brakes, you know what I'm talking about, or back it up, you know you got to go in reverse. That's a language, right? But when you first sat down, now that I'm seeing my son, he's like, what are you talking about? What do you mean? I don't understand. It's the same thing with trading. And if you don't know the basics, what the market is telling you, you're going to be going forward when you should be backing it up, right? So that's kind of what I want to talk to you guys about, the 4 basic strategies, what the market is talking to us. So it becomes as automatic when you sit in the car. So before we get fully started, I created a worksheet for you guys to follow along this entire presentation. It's completely free. Go right here, makingofadaytrader.com, and you will get it automatically. So go right here. This is something for you to follow along, okay? So please make sure you get it, makingofadaytrader.com. And okay, so let's continue, makingofadaytrader.com. Now, let's begin. Getting back to the basics, building your trading foundation. What are the basics of day trading? So obviously, you have to have a charting platform, right? If you're going to be a day trader, it's kind of like being a Formula One racer. You can't be a racer without a car. You can't be a trader without a platform. It's just not going to happen. If you want to invest, cool. That's a totally other thing. But day trading, you do need your platform, right? Indicators, you need to have indicators. I personally use 1 chart, 3 indicators. That's all I use. This is all that I use for my day trading. So remember, everything I'm going to be going over with you guys today is a making of a day trader. The entire presentation is pretty much what I use as my own cheat sheets when I sit down and trade. All right, so basic number 1, market movement and the breakdown of a trend. Yeah, you know, we all logistically know that there's an uptrend, there's a downtrend, and there's a sideways trend. We logistically understand that, we get it. However, and I'm going to say this, and this is a really huge and very important part of this presentation. The sideways trend, this is literally the trader's worst enemy. Because if you guys go back and look at your books or look at what your majority of your losses are, it's usually in the sideways trend. What is sideways trend? They're usually called indecision areas, exhaustion patterns, the chop. I mean, there's a gazillion words for the same thing. It's the sideways movement, the channeling market, right? Because there's indecision there. We cannot recognize or understand that indecision. I'm going to explain that in a little bit. So before I get more into it, let's talk about the trending markets, right? We understand there's a downward trend, sideways trend, upward trend. What's an upward trend? It's when each pivot is going higher than the other. It's really basic, but this is an upward trend, right? You could call it whatever you want. You could call it a bull market, market trending up, market going down, going up, trending. It's when you're going for a long, it's when you're buying. It's when you're buying at a lower price point and exiting out on a higher price point. You're going long. These are all the same words, but people get caught up on these semantics. So let's get them out of the way. It's an upward trend, right? Downward trend. Each pivot is going lower than the other. And this is super important, guys. If you're day trading, going short and going long, we are equal, okay? We do not say there, oh, but I'm worried about, going short, like, oh, but people are losing money. Who cares? We are here for technical analysis. We are here for day trading. The majority of day traders make more money probably shorting the market than they do going long. So just, don't discriminate, don't get empathetic about it. Go short when you see the beautiful opportunity. What is going short? You're entering at a higher price point, exiting at a lower price point. That's what going short is. Selling, shorting the market trending down, however you want to call it. Again, semantics, the bear market. It doesn't matter. It's all about the same thing. Now, being a scalper is what I am. That's mainly what I do, is I go for really small profits with a very small risk, and they're quick, right? So it's really cool because you get your profits really within a minute or 3 minutes. So in that case, I obviously watch for the full understanding the momentum, if it's going up or down, whatever. But there's a deeper retracement, which I call immediate momentum, which are these mini correction trends. I watch for them, and I can monetize at least on the very first move. And then when it fails and continues in the same direction, I know and prepared. Now, consolidation areas, transitional areas, exhaustion patterns, sideways movements, whatever you want to call it, the reality is the trader's worst enemy. How do we spot them? How do we avoid them? Here's how it works. Okay, this is what a consolidation market looks like. So why are these the biggest enemies for traders? Really simple. Like Julie was saying, it is such a mental, this is a mental work of art, literally, like I call it that, because it's so much about what's happening in the mind. Now, when we're starting to see this kind of a movement, this is when our mind starts to play tricks on us. And what I say is what happens is we tell ourselves stories. So there are two kinds of traders. There are the trend is your friend type of a trader. And when the trend is your friend, looking at a trader type of person, looking at this kind of a market, and they're starting to recognize that there's a sideways movement, it's an indecision area, their mind starts to tell them, you know what, the market's been going up all day, I'm going long because it's gonna continue. So then there's the other kind of trader, it's the contrarian trader. I was that particular trader. So I was looking at the market and I used to be like, okay, the market's been going up too much. It's time to correct. I'm going short. Here's the reality, guys. And when you actually get this in your heads, it will completely change your game. They're all bullshit. None of those stories are real. None of them. Because you know what? The market's going to do what the market is going to do. The only thing that you, as a smart trader, the retail individual trader, can do in moments like this, you sit out. Because there's three things that traders do. We have to know when to get in, we have to know when to get out, and really important and underused, know when to stay out. This is when you stay out. Instead of telling your nonsense stories, it's going to go up, it should do this, it should that, it shouldn't do anything. What it should do and what you should do is sit out and wait until it gives you confirmation. This is what consolidation markets look like. It could be going down all day in that chop, boom, and now it transitions. But you, with a story, is now killing yourself. Oh my God, I should have done this. No, it shouldn't. The market is going to do what the market is going to do. We have many consolidations. We have larger consolidations. We have whatever kind of consolidation you want to look at, but they are consolidations, and you have to have the discipline to see that that is a red light. Now, how do we recognize these consolidations? How do we recognize these areas and know when to stay out? So this is the deal. The market respects areas. It respects areas, and we as individual retail traders, we need to as well. What are those areas? They're support and resistance areas. The way I look at support and resistance areas is when you get into a car, do you put on your seatbelt? Hell yeah, of course you do, because you want to protect yourself. My son gets into a car, the first thing he has to do is put on that seatbelt. If you go into the market and you do not draw in your support and resistance areas, forget it. You have not at all learned how to protect yourself, because that's where the chop happens, is in between those areas. And if you don't know how to draw them, if you don't know where to recognize them, stop driving, stop being in that live market and learn right now. So if there's anything you're going to learn from me today, please, at all, is support and resistance areas. So what's a resistance area? It's literally the ceiling of the market. And it's not just one hit. It's when the market revisits and hits that area several times. I like to say at least 3 or 4 times. This is a very significant resistance area, so much so that it actually changed the direction of the market. Again, this is what it looks like. Since I only go in for about an hour, hour and a half into the market, I need to know when that resistance area is, because it can revisit it. And if I don't have it drawn here, and if I'm going for a long and it's hitting this area and I'm wondering why, oh wait, it's a resistance area. I'm protected. I'm not touching that market until it breaks through or changes direction. And that's when I sit and wait for it to happen. What is a support area? It's the floor of the ceiling. The floor. It's where the market is hitting over and over again at the bottom. And like I said before, the market revisits these areas. And if you don't have that area, how can you know when it's doing it? Please draw in your areas. These are so important. So important, because now you know when there are channels, you know when there is sideways movement, you know when there might be a transition and a change in direction. This is what they look like. This is how we know. It cannot be a mental thing. It's like saying I'm going to put in a mental stop. Mental stops don't work. Mental support resistance areas don't work, because when you're in the live market, you know how it goes. The adrenaline is pumping. Everything is blinded. Our heartbeats are pumping. Be ready. Draw it in. Everything is to the left on your chart, but if it's not drawn in, how are you going to know? How do we start to spot when these areas start to form? Through reversal patterns. To me, reversal patterns are my religion. Like, they are literally my holy grail. But when they are coupled with divergence, forget about it. Like, I am so true to reverse, and these are free, guys. This isn't anything that you have to buy. There's not a software. It's right there for you in any chart, any price action, whatever. So what I use is, at the bottom, you'll notice that I have an indicator. That is the MACDs. MACDs, for me, I have realized, are the least lagging indicator. There's so many indicators, but they lag the least, I find. Meaning that when when they start to be divergent, it's showing that the market is starting to lose its strength. And when I see a double bottom or a triple top, those are reversal patterns with divergence. I don't come anywhere near the market. So that's what a divergence looks like. Look at my double bottom. Look at the two pivots. These pivots are almost straight. Meanwhile, these are going super high. Look at this. Massive divergence. This is pretty much flat. Look at that. It's telling me that something is about to happen. All right, so remember, guys, all this that I was showing you, it is in the making of a daytrader.com free document. Okay, so Mark, thank you. Welcome from Guatemala. Are you in Guatemala? I don't welcome you from Guatemala. What time frame do I use? Quintine? Sorry if I'm not pronouncing it correctly. I don't use time frames. I use tick charts, 610 tick charts specifically. Basically, I'll show you, I'm gonna open up my live charts as well, so that you guys could see. Tick charts is literally seeing real-time volume and volatility in the moment. It's awesome. And then I also have another question about the MACD settings. Again, I'm going to show that to you all when I show you my live charts. So let's continue putting it all together. Like I said, the whole point of this presentation is understanding the power of the breakout trade. Here's the deal, guys. If you don't have your support and resistance areas not drawn in, you're never going to be able to spot the breakout. Why? Because that's the only way we can do it. And if you are a real trader and understand, breakout trades can be some of the most profitable, amazing trades out there. Okay, so breakout trade, I'm going to give it to you guys in total layman's terms, enough for my kids to understand. I have one question here. How do you decide the thickness of your support and resistance areas? No, I usually about 1 point. So each of my little boxes that you guys see here, it's about a point. Because I trade the ES minis, and it's usually done by points. So I have done my charts that it is 1 point. And I think that 1 point is usually an average, but it has to hit at least 3 to 4 times, right? 1, 2, 3. So as you can see here, my resistance area is a little bit less, and it's not solid. Oh my God, it's got to be like this. It's an average, right? It's a roundabout. So let me explain to you the breakout trade. Super easy for you to understand. And also, you will really understand the concept of consolidation areas, transition areas, exhaustion patterns, those sideways areas. So here you are. Imagine your friend just called you and said, hey, buddy, come over my house. You've been to your friend's house a gazillion times. They live exactly north of you. You've done this drive 1,000 times, right? Now, you get in your car, you hop in your car, you're full of energy, you're full of confidence knowing where you're going. So if I was going to bet on you, if I was going to say, she's going to head to her friend, she's going to get at least 3 miles with total confidence, probably going to win, right? It's a good chance. Now, all of a sudden, you're driving on the highway that you've been on 1,000 times, but there's a detour. There's a big construction site, and a guy is saying, you got to go east. You got to go to the right. I don't know about you. This is what happens to me. I get super stressed out. Oh my God, what if they don't continue with the detour? I'm in an area I don't know. What if I get lost? Oh my God, what if the detour is really bad? It's taking me through a really bad neighborhood. Oh my God, what if the detour takes me to all these areas and all of a sudden I get to an area and they're like, you know what? It's not going to happen. You got to turn back. and there is no detour going back, so you're completely lost. Or it's telling you, you know what, you can continue, but you got to take side roads. Again, what is going on with me? I'm in total stress mode. I am in total uncertainty area. That's a consolidation area. I have no idea what's going on. But all of a sudden, the construction guy says, you know what? It's all good. Here's the way back to the highway that you know super well in the same direction. And what happens? You're full of confidence. You're full of energy. You're actually renewed, right? That's the breakout. The breakout is that renewed confirmation that it's going to continue. How long? We don't care, but it's enough to continue for a good one trade, right? That's the breakout trade. Okay, so do you want to be in this uncertainty area? Oh my God, is the detour going to continue? Am I going to get lost so I have to turn back? Or do you want to be in a place, woohoo, it's ready, it's going, I'm getting in? For sure, we want to be in that confidence zone. That's what trading should be. It's about where you're feeling the most amount of knowing and understanding. This is a breakout. This is what the breakout trade does. But if you don't have your support and resistance areas drawn in, fortunately, it's never going to happen. Okay, so here is the way I do my breakout trades. I use my indicators to obviously give me that momentum and understanding where to enter. I use three EMA lines. So you'll see here I have EMA lines. I use the 20 EMA line period, the 52, which is my main one, and the yellow one is the 135 EMA line. So it's a little bit of a bigger time frame. I use my MACDs to show me strength and to show me weakness. So right here, this dotted line of the MACDs, this is the zero line. This is the dead zone. This is when there's absolutely no strength. And these are not indicators. These are just like little lines that I drew for myself, knowing whenever I get to them, there's actual strength. So whenever it's in between, that means it's a lot of nothingness. And if you look here, it's pretty dead. It's really not going anywhere, right? But all of a sudden, the breakout happens, right? The construction worker tells me, all right, road is open, go, continue in your direction. And boom, I'm flying. Look at this massive energy and barely any retracement. I use my EMA lines as a place to take my trades. Just like an archer, you know, think of archers. Do you think they just walk around aimlessly and taking shots at their targets? Absolutely not. They have a very specific and defined place where they stand, right? It's the same thing with day trading. You have to know where you're taking your trades from, and you have to have a, excuse me, a profit in place. You can't do it any other way. Excuse me, I have to drink some water because again, what is trading? It's a mental thing, okay? And what happens when you don't have a profit in place? Greed takes over. Profit targets to me are as important as risk management because I cannot even begin to tell you the amount of times that my students come to me and they're like, oh my God, it hit my target, but I said, oh my God, it's going to continue on, and I removed the target, and guess what? It reversed and hit the stop. Because gratefully, they were smart enough to have a stop. A lot of people put in mental stops, which aren't even, they're not real, right? I mean, I've used to use those mental stops, losing entire accounts, right? You have to have a profit target in place. If you are using several contracts, as in my case for the E-minis, you can do split targets, obviously, and then you just move the stop to a break even, but you have to have a target in place. All right, so another quick bonus trade that I would like to show you, because using these areas, support and resistance areas, and just understanding the basics, you could also know when the transition of a new trend happens. Because here we've been going up, it's been above my zero line, and then it finally changed direction, and it's given me massive strength, totally passed through everything, massive strength, boom, I'm entering right there. Okay, here it is. We've been in this chop, in this exhaustion pattern, boom, it totally went through, barely retraced, it hit my line in the sand, I'm in, boom, I'm out with my target. Okay, remember guys, all of this is makingofadaytrader.com. Okay, so ready? Hopefully you guys all got makingofadaytrader.com. And hang on one second here. Let's see. So are you buying the first pullback after the breakout? Yes, I am buying. Exactly. I have to have the whole pullback lines up properly for me. Otherwise, it also has to make sense. It can't just be like, oh, it's the first one. No, it has to be, the MACDs have to have strength. There shouldn't be any divergence, right? Okay, let's now go into my live charts so you guys could get an idea of what I'm talking about. Let me know if you guys are seeing my charts. Oh, hang on a second, there's a question here. Yeah, hopefully you guys are seeing my charts. Okay, so some of the questions you guys asked me is my MACD settings. All right, so I use NinjaTrader. You could use pretty much any really good platform. These are our universal indicators. So hang on one second. Indicators right here. There you go. Do you guys see my MACDs right here? So it's literally the universal. I use the fast, slow, and smooth. My fast is 12, my slow is 26, my smooth is 9. So when you first do the MACDs, it's actually 3 different plots. You have the actual MACD, and then you have the average and the difference. I like to keep my charts really clean. So I have made the average and the difference, I just made them transparent. I don't use them. Or if you're like in Thinkorswim, you could just undo the little check for it so you don't have to see it. And then I just do the MACDs. I personally like the dots because I get to see between the dots the strength. If they're crumpled together, obviously there's no strength. If they're separated, so that's my MACDs. Okay, so some of you guys asked me about my time frame. I use the 610 tick chart. So what is that? Do you guys see right here where it says ticks remaining? Each bar has 610 transactions that are happening in the moment. So I know how fast, I know if there's volatility, I know if there's no volatility. But if you have a volume indicator, they are really lagging. They're not in the moment. And if you're sitting in a 1 or a 5 minute chart and wondering why it's so slow, you don't have the full data in front of you. But with the tick charts, it's really cool. And you can use tick charts on any instrument. And that's the cool thing about it, right? How do you deal with false breakouts? They're going to happen. So how I like to avoid them is, first of all, when the breakout happens, let me see if I could show you here. Okay, so here would be a breakout, right? We have this support area. It's not really the kind of breakout that I was talking about, but it did become a support area. So all 3 of my EMA lines break through, sorry, these 2 at least, these 2 EMAs, and that's like a bonus, break through, that's when I look for that first entry. Otherwise, there's a much, if they don't do that, it's a very high probability that it's gonna be a false breakout. Okay, so here's another example. All right, we have this resistance area. Now, if it was just here, I would not enter, but it broke through, massive strength, boom, right here. Look at that beautiful setup right there. That's what they look like, right? That's what those breakouts look like. And the false ones can be somewhat avoided, right? They're not completely avoided, but you probably are narrowing it down by a lot more, right? So here's a good example. Here is the first resistance area that we will be looking at, right? And now we have this breakout. However, my EMA line did not break through. I would not be looking at those breakouts. Now, that is much more of a confirmation, right? Look at that. Now I would be totally looking for that entry point. Okay, so that's what I look at more for my breakouts. That's how I use it more. Let me know if that made sense to you guys, and if you have any other. Dan tried the website and it didn't work. Making of a day trader, daytrader.com. It definitely works. I did it this afternoon. Absolutely. You will get an email with the document with a presentation. Making of a daytrader.com. Absolutely. Okay, if not, please, you could email me at thetraderchick@gmail.com or just go to thetraderchick.com as well. All right, guys. So this is how I pretty much gauge the market, right? This is what I look at. I have to look at where the areas are. I always make sure my areas are always drawn in because they are my safety net, right? They are my seat belts. Without them, I don't know what's really going on, and they're going to be everywhere, and you have to use them to your advantage, right? Oops, hang on a second here. Okay, Look at that. This is a massive support area, right? But if I am not drawing it in, I won't know. And I was wondering, why is this not continuing on? Well, hey, it hit this area several times before, right? Okay, making of a daytrader.com, guys. Let me see if there's any other questions for now. No. Okay, let me know if you guys have any other questions. Hang on one second here. Oops. Okay. Sorry, there we go. Okay, took a little while to download. Okay, now imagine if we could do this every single week together. This is super exciting for me right now because the thing is, a lot of us are self-educating, are self-going at it. And the problem is, and this is really the reality, okay? How do you know that you're doing it right? I can't even tell you the amount of students I have that they're like, oh, I know how to trade with support and resistance areas. And all it turns out was they weren't drawing them correctly, or they weren't looking at them. And that can literally mean the difference with winning trades or losing trades, right? So let me break this down for you guys, okay? I've made something super, super special. When you get the cheat sheet, this presentation, you immediately get put on an exclusive VIP list, okay? And this can literally be the turning point for you guys, okay? It's a special invite that is gonna be coming into your inbox. Only comes to the people, only to the people that are part of this presentation live. Nobody else has got this link, okay? Makingofadaytrader.com. Now, here it is, what I have for you. So many of you, so many people have asked me after the presentations, do I have a program? And I always hold back because the reality is I don't want you getting just another product. However, what I did do is I created something really special, Simplifying Day Trading Futures course. Okay, so literally they are bite-sized videos, quick explanations, so you really grasp it because we don't have, our concentration also doesn't work that much. So they're quick, understandable, easy bite-size for you to sit down and truly understand how I trade and how you can apply it. And you could do this from any device. You could use it from iPads, desktops, phones, laptops, you name it. It can be done anywhere. And it's literally as if though I am sitting side by side with you. But again, I can only make this special invite to people who get the cheat sheet of makingofadaytrader.com. So make sure you go to the link and subscribe, and that's where you'll get it right away. Now, the thing also, I want to give this, I don't really want to give this out just like that, is this for special only for the participants. I will be telling you about a 6-month one-on-one mentorship, right? So one-on-one mentorship, so you actually really have accountability and know how you're doing. And remember, it only comes if you get the free cheat sheet. And on top of that, I'm gonna give you a super extra bonus, okay? 6 months free membership to my live chat room. 6 months where I'm live analyzing and taking trades. Not only do you get me mentoring with you 6 months, but you also get 6 months of membership in the live chat room. This isn't like me hiring a bunch of moderators that don't have any clue how to trade. It's me. It's me sitting there implementing, answering all your questions. It's literally like me sitting with you in the living room. And it's lifetime gear. It's lifetime curriculum access because the program and all that I offer is super robust, and I know that it could be a lot. So I'm giving everyone lifetime curriculum access. Now, this program, I'm not going to tell you the price right now, but it's literally less than the price of an average trade. Just think of the amount of money you guys spend on a trade, and it's less than the average trade. Okay, I'm not releasing the price to you, but if you once you get makingofadaytrader.com, you will be notified right away. But here's the thing, okay? There is a catch to everything. I get it. So here's the thing. I actually only will have 25 spots available. Why? Because it's due to my one-on-one mentorship, I'm only able to take on 25 new students this time so that you can get my full attention and commitment to your trading. That's the catch. And you can only do it right now. Makingofadaytrader.com is the first 25 people only. Okay, that's the thing. Remember, when you get the free cheat sheet, you get put on the VIP list and are eligible for the 6 months of one-on-one mentorship with me. lifetime curriculum access, 6 months in the live trade chat room, and getting full curriculum access to the whole course. Also, all of the live chat rooms that I've already had, and the live chat room, which is really cool. It's actually this community. There's people hanging out there and working together. So if you haven't gotten to the cheat sheet, makingofadaytrader.com. Okay. And
Marina,
I will
you
also
may want to check on that because it's not coming up for me on either of my browsers. It just times out.
okay, hang on a second.
But I've also shared the link, and I also clarified that you'd
So
be
this
following up with everybody.
Okay, but this is what you guys should be seeing, right? Is this what you guys are seeing? Makingofadaytrader.com?
No, it's not coming up at all. Well, one
Makingofadaytrader.com. Really?
person says mine came up fine. I've had three, four, five people who've gotten to it fine. So it may just be my internet or my browser that I'm using.
Oh, that's really weird. Hang on a
Okay,
second.
it's cool.
All right, so this is it right here. Let me just put it in again for everybody. This is the other link as well. Yeah, that's interesting. I don't know why it's not coming up for you. That's really weird. Okay, so makingofadaytrader.com. Hopefully, if not, guys, you can email me at thetraderchick.com or thetraderchick@gmail.com as well. Okay, so let me answer some more questions. What are the values of my support and resistance levels? There are no values, because if you're going to look at values, you're going to miss the whole picture of what the market is doing, right? So let's just look at this really quickly once again. I don't have a clue what the values are. Also, I trade the E-minis, and if you ever talk to E-mini traders, we don't ever look at the price here because that's not important for us. E-minis, we only focus on points, and it's $50 per point. So the value is Vitorini, sorry if I didn't pronounce your name correctly, is where is the market hitting over and over again? Where is that support area? Where is that resistance area? That's the value. So don't look at values and don't calculate and do mathematical equations. They don't count. What counts is the market is hitting this area 1,000 times. Oh, wait, I got to respect that area. Okay, Mariano, how do you pick your watch list? I don't. I am an ES mini futures trader. That is my one instrument. You got to master an instrument. There's, a lot of people that do different stocks. If you're going to do different stocks, pick a category, pick a sector. Don't do 1,000 things. You're going to go nowhere. So I am ES mini and I love it. It's the one thing that I need. I don't have to do any research, nothing. I look at my charts. It's pure technical analysis. It's awesome. Sohail, if there is no pullback and it takes you off a trade, there is always a pullback and you only enter at a pullback. You will not enter anywhere else because then you're that archer that walks around aimlessly on a field. Okay, you need to have you need to know where you're pulling back. This is a pullback. If you don't know what a pullback is, guys, stop trading live right now. You need to learn what a pullback is. Okay, it's a retracement. It's a correction. What moving averages do I use? I use EMAs, which are exponential moving averages. I use the 20, I use the 52, and I use the 135. Okay, hopefully that makes more sense. Let me see here. Site says 1 month, now 6 months. Exactly, Richard, because it's a gift for you guys only. You get 6 months with me, I guarantee you. And if you don't get that in your email, let me know. But you should get an email specifically stating 6 months. It's only for people who are at the presentation live. Nobody else is going to get that bonus. So yeah, if you can't find it, please let me know and I'll be happy to guarantee it regardless. Okay, all right, guys.
Marina, let me ask quickly. You just said that you had to be on the live webinar to get the special bonus of 6 months?
Yes.
Okay, because we are going to post a recording of this and I don't want everybody to, I don't want some people to come in late and say, oh, I want that deal. And we will be really clear that that's for everybody who's on here live. Yes?
Yeah. Okay. So I wrote you something. I don't know if you saw it in the chat. Okay, so yeah, guys, let me know any questions, and please let me know.
All right.
Okay,
I think we've
me.
gotten everybody in. I've been sending them to you right across the board. Oh, we got one more here I'm going to send you.
Okay, cool. How do you know that the pullback is actually a reversal in the trend? Well, that's the whole point, right? Like that's when you watch what is happening in the market. You see when the reversal happens. You see when it crosses your areas. You see when the MACDs are talking to you. So that's the strategy, right? That's understanding how it all is. Okay, Robert, using any higher time frames for confirmation? I only use the 610 tick chart. For me, it has been absolutely amazing. It's because it's in the live market, seeing exactly the amount of ticks that are going on, which is transactions. And you could absolutely use whatever you want, whatever you feel comfortable with. This is something that I have recognized for me, okay? Let me know if that makes sense. How do you know the pullback? Okay, chart is so clean. Robert, it's not hard. I'll be happy to help you with that. It's literally 2 indicators. I used to have 3 monitors, 10 indicators, and you know what I had? A lot of stress and hard work. So Sheldon, my stops are always 1 point with my risk 1 point. It's all about the trade setup. It's not about just random stops. It's all about a setup, right? It's all about the strategy. Okay, guys, let me know if there's any more questions. And I really, really am grateful that you guys are here. And thank you, Sherry, so much. This has been exciting. We've been talking about me joining for a month, so I'm excited that it's here. I can't believe it's already
We really
here.
appreciated it. We really appreciated it. And
October
I know
is
that
flying.
I'm going to be in touch with you in the future too. So I hope you'll come back again.
Definitely. And thank you guys. Really, I really appreciate you all being here. Thank you so much. Thanks, Jay.
All right. Thank you. Thank you for
Okay.
joining us. Okay, everybody.
Bye, Sherry.
That's going to do it for us today. And I just want to remind you that we are going to be posting this recording probably in just a little while, but no later than in the morning, right here on tradersexclusive.com. And we will be doing another webinar in the very near future. So we'd just like to thank all of our presenters today, and I'd like to thank everybody for coming and attending. And I'm going to sign off now saying trade well. Bye-bye now.